Firstly, good morning, everybody. Thank you so much for coming to the Shard today. Paul, there's probably a spot over there. We have got a pretty fun-packed and fully packed morning, and the purpose of which is to really give you a much richer picture as to what we've been doing in Mitie in the last 2.5 years, beyond the sort of bald financial data that Paul and I only really have a short period of time twice a year to present to you. So today's a chance to take a look at Mitie, not in the rear view mirror as it were, but by looking at the road ahead. And you've heard me say this before, that this is not FMCG, this industry, and it doesn't have frequent purchase decisions. In facilities management, it takes time. It takes time to change service delivery. It takes time to shift perceptions, and it takes time to transform a business, and that's what we've been doing the last 2.5 years. And this is a time that this management team that you'll meet today have had together to really transform the business. We've had the time to lay out our guiding strategy. We've had the time to build the strong foundations that Paul will talk you through. We've had the time to build new capabilities, as Joe and Simon will address, and we've had time to make technology really start to work for us, as David Cooper will demonstrate. And we've had the time to build business leadership positions in both business services and technical services that Jason and Carlo will share in the breakout sessions. So in short, we have had the time to make a difference, the time to transform our company and build a new Mitie. And that's why I'm really excited about today's Capital Markets Day, because this is our time today and show you what we've been doing. And it's the time for us that we look ahead, the time to try and convert all these efforts and these foundations that we've been building and move, as we call it, into accelerated value creation. So that's the purpose of today. I hope that's why everyone's here. And if we get that message over today, then our time will have been well spent indeed. So let me just start with the big picture about the wonderful world of facilities management as we know it. Yes, it's a tough industry. It's a challenging industry. But how many companies are out there like Mitie who employ 50,000 colleagues every day, who look after the facilities that 5 million Britons pass through every day? How many companies look after schools and hospitals, airports, railway stations, immigration centres, or have the pleasure of sitting down with Cabinet Office and discussing our impact on social value? So that's our footprint, and that's our responsibility. And for me, FM really is an important industry and an industry of strategic significance. And here shown the slide, an industry where I really believe we've got positive macro trends. Whether it's McKinsey data or Bain or CBRE or Mintel, no one thinks this is anything other than a growing industry. So we start in a good place with macro trends in our favour. If you look at the traditional measures of health of the industry, number one on the top left there, real estate occupancy continues to grow with continued lows in surplus office space capacity. Spend in facilities management on the right continues to rise as clients focus on what they're good at and leave taking care of the essentials to companies like Mitie. Third, integrated FM providers are gaining more of the share of wallet and continuing to add more value to our clients. If I look at Sainsbury's, when I joined it was a 14 million a year account, and now it's approaching 90 million a year account. But on top of those traditional macro trends, I think we've got some really exciting and emerging new trends coming through which point to the future of the industry. Trends such as the importance of well-being at work and getting the best out of your people. And that's the reason why we moved to this iconic building and fitted it out the way we wanted to, the Mitie way. We wanted to attract the very best people in the industry who feel they want to be part of a winning team. Or the IoT revolution and the amazing real-time information it provides, something you'll see today throughout the presentations. And then finally, there's a trend that I think is relevant to all of us here, and that's the footprint we leave as a business on the environment and on the society that we serve. And it's a trend that we spend a lot of time today discussing with our clients, because we really do believe we can help them on that journey. So those are the 6 key macro trends of our industry, an industry that is dynamic, an industry that's growing, and all these trends play to the strengths we've chosen for our company and play to our growing strategy and the impact that we have on our capabilities. So real strengths of what we do well in Mitie today. We have an unrivaled list of customers who increasingly value what we do. We've got 50,000 people who are today better trained, better motivated, better incentivized to deliver the exceptional every day. With growing scale in our 2 core divisions, with the best margins in the industry and growing faster than the rest of the market. And finally, a truly differentiated technology offer. MyTech in Belfast, our SOC in Bracknell, our GSOC you'll hear about in Northampton, our data scientists in Bristol. Customers, people, cost, and technology. These were the 4 pillars of the strategy we launched in summer of 2017, and they very much still guide us today. And don't just take our word for it that we are doing the right things and focusing on the right things. Look at what customers said they valued in a recent UBS survey: quality of relationships, ability to deliver, cost competitiveness, and technologically leading. And trends that actually are only increasing each year, and which again play to our Mitie strengths. So that's why we feel confident about our future. Hopefully you'll see some of that confidence today when you meet the teams. You'll see we have built strong foundations, and you'll see that we are excited about the open road ahead of us. And you'll see why we're confident that we're now moving to a new phase, that, as I said, of accelerated value creation, as we described at the recent interims presentation, with focus on market leadership and strategic account management, the SAMs, driving competitive advantage through technology, margin improvements through further cost efficiencies, you'll hear more about today, cementing our cultural transformation and deleveraging and free cash flow generation for the first time. Deliver all 5 strategic priorities, and we're confident we will deliver accelerated value creation. What gives us our confidence that our business model will now deliver? Well, simply put, we see the combination of better growth, lower costs, reducing one-off hits, and further deleveraging coming together to finally reward our shareholders for the support they've showed us during our transformation, which we're very grateful for. So that's our investor proposition, and that's the purpose of today, to demonstrate that phase 2, accelerated value creation, is now firmly upon us. So a quick look at the agenda. Paul will evidence the strong foundations I referred to that we've built from the investments that we've been making. Then we'll move into breakout sessions with Jason and Carlo, showing why we believe we can cement our market leadership positions in business and technical services. Peter will come back in the plenary sessions here to touch on the prospects for our specialist services divisions, as we call them. And then David, Joe, and Simon would show just how far we've come in building key capabilities for our future success. Muscle strength in IT and change, developing talent across all layers of the company, and finally winning in sales. Ultimately, sales and the confidence our clients show in Mitie is the best measure of our progress from my point of view. So we've planned time for mini Q&A sessions in the breakout sessions and in the capability sessions. Then I'll wrap up with some closing remarks and a final Q&A session. So as I said, there's plenty to take in today. Thank you again for coming. I think we've got 168 slides, but ask any questions you want, interrupt when you feel like it, make it interactive as possible. We've got the best of Mitie on show today, and we want it to work for you as well. We've got a coffee break at 10:15, and for those of you who can stay at 1 o'clock, we've got some lunch served at the gather station there. So I hope that's okay with everybody, in which case let me hand over to Paul Woolf. Thank you.
Thank you, Phil. So good morning, everybody. So over the last 2.5 years, we've fixed a lot of the basics at Mitie, making it a far stronger business, and we're now better positioned to deliver for our shareholders. So the business we inherited back in 2017 needed a lot of fixing. So we built the foundations for growth, as Phil said, by focusing on customers, people, cost, and technology. And as part of that transformation, we delivered 45 million of savings through Project Helix, which we used to reinvest back into those foundations, and we've actually now started Project Forte. So we also inherited a highly stretched balance sheet, which is not sustainable. So this fixing has consumed a lot of cash. As you can see in the middle column, almost 200 million in total. So one-off costs of Project Helix and now Forte add to 55 million. Other restructuring costs, M&A costs, legacy liabilities associated with businesses we've now exited have cost us 40 million. And we've reduced off-balance sheet finance by 50 million, and we're paying our suppliers faster, which has cost us a further 50 million. So looking forwards, we expect more of the operating profit increases and more of the free cash flow to flow through to shareholders. So the Helix programme delivered 45 million of run rate savings. T200 was the immediate exit of 200 managers from the group early in 2017, saving £8 million. Within technical services, we've delayered, reduced subcontractor costs, consolidated the property portfolio. Finance back office processes were consolidated and then offshored, saving £7 million. IT support and applications development have both been offshored, and we've renegotiated contracts for the majority of our key suppliers, saving £5 million. Within HR, we centralised and consolidated temporary and permanent recruitment on an enterprise-wide platform, saving £6 million. We've reduced the property portfolio by 1/3, procurement savings through re-tendering and consolidating spend have already been significant, and we see this continuing as we work through our remaining supplier base. These savings have allowed us to fix historic underinvestment across Mitie. We invested in our commercial capability by creating a central team to manage our bid process, bid pipeline and bid library. This has radically improved the quality of our bidding. We've established a strategic account management programme which will ensure that we manage accounts the Mitie way. We now have strategic account managers for each of our largest 40 accounts who have account-wide responsibility for managing performance. For the first time ever, these strategic account managers are decision makers across the account and have their incentives based on the total account performance, which will help drive cross-sales, efficiency and cash management. We've also recently built a government defence team from scratch. Now Mitie is qualified on several Crown Commercial Services frameworks. We see substantial opportunities in large MOD facilities management contracts, along with other public sector opportunities. We've also invested heavily into customer service. When we inherited the business, we were patently not meeting the expectations of a number of our key customers. So over the last 2 years, we've added frontline resource, we've added management resource, we've also improved the management information we provide, and this has seen our Net Promoter Score increase by 39 points to +12. On the people agenda, I've already described the new common platforms that have been introduced to manage permanent and temporary recruitment. In addition, we've professionalised talent development, established career development opportunities, created an employee engagement programme, and this has seen our employee engagement rise to 45%. And our fourth investment area has been technology, where we firstly fixed the enabling infrastructure, such as network security and stability and data storage. We've also heavily invested behind customer-facing applications, such as performance dashboards, employee apps for day-to-day facilities management. But our largest investment has been into the data lake, and this is now powering the connected workspace offering by allowing large volumes of customer data to be ingested and then analysed. So all this reinvestment has held back operating profit growth since the start of the transformation. Our FY16-17 EBIT, restated for M&A and IFRS 15, was £76 million. Over the 2.5 years up to H1 1920, this has increased by 5 million to 81 million on an LTM basis. Within this 5 million increase, the transformation benefits of Project Helix have been fully invested back into fixing the underinvestment into customers, people and technology. And in addition, we needed to build operating profit capacity to fund incentives, which never used to pass through the P&L prior to FY 16-17. Excluding these factors, underlying operating profit growth would be about 15 million. This is lower than we would have liked, but it still demonstrates forward progress. Our top-line performance, however, has responded more quickly to the transformation. In the lead-up to FY 16-17, our revenue was dropping at 1% per annum. In phase 1 of the transformation, our organic revenue growth, that's revenue excluding VSG and international, accelerated to 5%, and we're now saying 2 to 4% for the next few years under phase 2. This takes account of the general economic slowdown and the associated reduction in project works. Behind this turnaround, the 40 strategic accounts have grown fastest. These accounts have grown at an average of 9% CAGR over the last 2.5 years, with 6 of them more than doubling in size. This has been driven by the strategic account management programme, as well as our improved technology offering. Now, we have good line of sight on our 4.5% to 5.5% medium-term margin target. You can see here the key building blocks, of which Project Forte, the Technical Services Workflow Transformation Programme, is by far the largest contributor, generating 40 to 70 basis points. Carlo will describe how this will be achieved in his section. Our ongoing Strategic Account Management, or SAM, focus is expected to deliver 5 to 15 basis points as the SAMs look for operating efficiencies in the way they manage their accounts. Simon will cover this. Procurement should deliver 15 to 30 basis points, which I will explain on the next slide. Increased higher margin technology penetration within our 2 main divisions will generate 5 to 15 basis points. And the combination of cleaning into business services, together with improving the VSG returns, will add a further 10 to 30 basis points, which Jason will describe. And finally, David Cooper will show how process simplification could be worth 5 to 20 basis points. Now, this all adds to a range of uplifts between 80 and 180 basis points. We've also made the assumption that our underlying contract margins will remain intact. This assumption is based on our ongoing ability to drive incremental margin improvements as contracts mature, together with the stickiness created by our client-facing technology offering, and these will offset any impacts from resetting contracts at renewal. In addition, we're only assuming that half the benefits from Project Forte will drop to our bottom line. We haven't identified specific areas that will require us to reinvest the benefits, but we're keeping these savings as an additional contingency against any other margin erosion instances. These elements sit behind our FY 22-23 guidance of margins of 4.5% to 5.5%. So here we can see a couple of case studies on how we will see margin growth from our procurement activities. Procurement has already contributed to some of the benefits we've seen in Project Helix, but there's more to come. Sitting at the heart of this, we've increased the size and capability of our procurement team to enable more of our spend to be consolidated under Master Framework Agreements, or MFAs. Last year, spend covered by MFAs represented about 60% of our total inputs. We expect this to rise to over 80% over the next few years. Now, each time we consolidate a spend category across Mitie, we see savings dropping out. Taking electrical wholesalers, for example, we reduced the number of suppliers from 8 to 2, we specified and standardised our inputs, and we carried out a broad tender process. This has generated 700k per annum savings. In agency labour, we consolidated our total spend onto a single platform, and we're now realising savings of 800,000 per annum. Next up, we'll be looking at electrical contractors, fire and security contractors, HVAC contractors, and there are many more categories to follow. So we see potential annualised savings of up to 6 million over the next couple of years, and importantly, we would expect these changes to be, if anything, additive to the customer experience. Looking now at cash flow, you can see how it has also been held back by restructuring over the last 2.5 years. Whilst our underlying free cash flow generation has been around 120 million, and we've generated a net 105 million from M&A, This has been consumed by balance sheet normalisation actions, so reducing factoring and paying our suppliers quicker, by projects Helix and Forte, and by other exceptional costs, including legacy contractual settlements and business closure costs that we inherited. We've also paid out around 30 million of dividends. So overall, our net debt has remained almost static over the period since the start of the transformation. That's our period end net debt has. Looking forwards, the negative headwinds should reduce. The balance sheet's now stronger with significantly lower levels of normalisation required, and phase 2 transformation and other one-off costs will be lower than during phase 1, albeit they will continue for the next 2 years. Cash tax will be higher than in the early transformation, and CapEx will also be higher as we build out our technical services case management and accounting systems. Overall, this means we expect modest free cash flow over the next 2 years, rising to a normal free cash flow generation from FY 22-23 onwards. Our balance sheet is now far stronger than it was when we inherited the business. TFO, our measure of total financial obligations, including net debt, invoice discounting, supply chain finance, operating leases, and pension deficit, has already reduced by 138 million since H1 16-17. We stated in our half-year results that our target is to reduce it further towards a TFO to EBITDA multiple of 2 times by FY 21-22. We see this being driven by a combination of free cash flow generation as well as EBITDA uplift over the next 2 to 3 years. Any further disposals would accelerate us hitting this target. Our improved control environment will help us generate more cash in the future. Our bidding controls now ensure that we're only signing up for profitable and sustainable business. Our balance sheet controls ensure that we can spot and resolve issues far quicker than before. And our cash management controls have given us a level of visibility and daily management of our receivables ledger that is far more effective. We are seeing the results already in a reduction in overdues, and we see another 10 to 20 million opportunity here. We've recently launched an enterprise-wide Cash is Strength programme. This is a multi-channel approach to training and awareness to drive better cash management throughout the business. The next big step in our cash management progress will come at the conclusion of Forte when we simplify our billing engine. This could free up a further 10 to 20 million of cash. So in summary, the next phase of our transformation will see more of the upsides flowing through to shareholders, whereas historically we've ploughed our P&L savings back into fixing the foundations, and we've used our free cash flow and M&A proceeds to fund transformation, historic liabilities and a stretched balance sheet. We see limited further P&L investments as being necessary to reset the business. And our cash drag will also be much lower. Whilst we still carry some historic liabilities and we will continue to reduce off-balance sheet finance, the quantums will be much lower than over the last few years. Our reported period-end cash position will improve more slowly, though, as we continue to unwind the short-term timing differences, which is why we're more focused on what we believe is the better measure of true cash strength, which is average daily net debt. On that note, I think it's now time to... we're going to...
or anything from there. We've got some time at the end to pull it together, but any burning points anyone wanted to raise at this point? Otherwise, we'll just crack on into the breakout groups. Is that okay with everybody, yeah? Fine, okay. Okay, so I think we've got, what are we saying? So Carlo is hosting the technical services session round to the, sort of down this corridor to my left, and straight ahead. There'll be people Carlo will sort of show everybody the way down there. So if you've got a blue lanyard, you'll be joining Carlo. If you've got a red lanyard, you'll be joining Jason, who's just stood up, who's right behind us in the business services area, sort of just behind where everybody's sitting at the back. And so these sessions last for 1 hour, during which time they'll be interactive, plenty of time for questions within each session. We then break for a quick coffee, so we'll all sort of gather back here for a cup of coffee, and then we swap into the other session, and I think we're all back here at about 11:30 for the further sessions. Excellent. See you then. Okay. Good, thanks.
Okay, good morning and welcome to Business Services. My name is Jason Towse. I'm the Managing Director of the division. I've been with Mitie just over 7 years, so I've sort of seen it in its old state, and I've seen it. I live and breathe it in its latest state, and I have to say, it's probably one of the most exciting times that I've experienced at Mitie, and most definitely in my career. Supporting me today, I'm joined by Kevin Tyrrell, our Commercial Director, Christian Watts, our Director of Fire and Security Systems, and James Gilden, our Director of Cleaning Services. And this morning we'll share an overview of the Business Services Division. We'll take a look at how we are integrating the cleaning and security businesses. We look deeper into the extremely successful security business, in particular looking at technologies, the strong customer base, and how we will accelerate value creation, and how we'll deliver continued growth by addressing the future of the sector, relying on our strengths and our differentiation and our agility to move with what is a continuously evolving threat landscape. The division is constructed in 3 sections, with 52% of the revenue sitting with security, where it provides end-to-end solutions through 22,000 direct employees. We run the largest global security operations centre in the country. We run a market-leading fire and security technology services business, and we maintain in excess of 35,000 security and fire systems every day. The cleaning services business accounts for almost 40% of our revenues and focuses around general and specialist and technical cleaning services that include clean rooms at high security environments, window cleaning, and prominent in the healthcare sector, and employs in excess of 21,000 people, many of whom contribute to the 20 million square feet that we clean in space in the retail sector alone every day. The remaining 8% is delivered through office services. That is made up of vetting services, predominantly in the aviation world, the front of house services, which complements our integrated facilities management services and our bundled offer mainly, and our document management business that operates with mail, reprographics and hybrid mail in the legal and professional sectors. I'd like to introduce you to the rest of our team. And to maintain positive momentum in this sector, it's our belief that you must have a stable and consistent team. And we have one of the best teams in the sector, that with the exception of Annabelle Nash, who's been with us in the last year, our fantastic HR director, and the newly appointed Mike Clancy, who's joined us as our operations director for the newly formed London sector. This team have been together for the duration of my tenure here, but more importantly, we've all grown as a management team in the last 3 years as we've realised significant growth. But to complement ourselves, we must continue to focus on our customers and our markets. And we're very proud to be working with representatives from the Metropolitan Police, GCHQ, the Army Intelligence Corps and the Royal Air Force. And we must continue to build the richness within our quality of our people as we face into some of the challenges that we face today. The integrating of the security and cleaning business will address some customer and market demands for the better use of equipment and driving workforce optimisation and unitary account manager both for on and off-site teams. It will allow us to benefit from the full value of subject matter expertise, as I explained in my last slide, whilst aligning the business under a single and stable and mature management and leadership team. And as you'd expect, we would realise all of the benefits that you would get from integrating these businesses. And you heard Paul refer to our journey from 4.5% to 5.5%. And the contribution coming from our business of 10 to 30 basis points is mainly from the integration of VSG. When we acquired that business was operating at 1%, and we expect to outturn at around about 4.2%, and we expect that to continue on the same trajectory as the rest of the business that we enjoy. And you would also see the benefits coming out of the realisation of the rest of the efficiencies of aligning our management teams. Mitie's strengths are apparent. Mitie's strengths are apparent, with security occupying the number 1 position in the market in terms of revenue and the range of services it offers, and is a leading force in the UK security market with in excess of 15% market share and growing. And that's almost double what it was 3 years ago. The cleaning business occupies number 3 in what is still a highly fragmented, competitive and congested market. That said, the cleaning business holds strong positions in the retail and transport sector and is developing across public sector and pharmaceutical sectors with a recent large win. And document management continues to perform well in legal and professional, front of house, in arts and culture, and vetting, as I've already alluded to, leads the way in the world of aviation. But as we continue to integrate, we must not lose focus on what we've been good at. We must cement our position as the leading player in the UK. We must refocus our efforts in the cleaning business through the 4 strategic pillars that James will take you through shortly. And we must stay true and current and continue the need to innovate and differentiate, to drive the use of technology to help reduce costs for ourselves and our customers and deliver a wider service offering through the business services.
Thank you. Good morning. Pleasure to meet you all today. I'm just going to move my stand. So we are refocusing our cleaning business to deliver the exceptional every day on behalf of our colleagues and customers, but also to ensure a smooth transition into our new ways of working under the business services model. We will do this through 4 strategic pillars as outlined. In a fragmented market, it is vital we address core charges and reduce our cost to serve. We are doing this by applying our principles of quality, efficiency and sustainable to any changes we are making so that our business is both lean and built for future growth. The cleaning offering is definitely greater than the sum of its parts, and our new go-to-market proposition will focus on bringing all of our know-how, capability and technology to the point of need for our customers. One of the real strengths of our cleaning business is how we underpin and support wider opportunities across the group. We have a great track record on cross-selling and are continuing to put real passion and energy into this activity as part of the new look business services division. However, we must continue to drive our earnings and are doing this through a change in our mix of margins and service offering. Whilst the cleaning market is heavily commoditised, there are increased areas of specialist service requirements that attract a premium value, and we are already playing in this space with plenty of scope to grow. Additionally, through focusing on sectors that value service above cost, we will be able to deliver higher and more sustainable levels of contribution. Finally, the cleaning service business remains an embedded and key component of the bundled and integrated Mitie offering. The opportunity to cross-sell and upsell is particularly great within the newly formed business services division, and through our one-team management model, we fully expect the trend to continue and become an even more important part of the service and margin mix for Mitie Group moving forwards.
Thank you, James. So as we switch our full attention back to security, alongside the concierge-style security that is intrinsically linked to the front-of-house workflow, you will have seen in recent months we live in a world of unpredictability, and most recently, the challenges we had the recent Friday on London Bridge, where we see year-on-year increases in business crime, multi-location protests, extremism, and low-level yet consequence-less antisocial behaviour, all in the backdrop of what is a steady withdrawal of policing and community policing, whilst their focus is quite rightly directed at more serious activity. Our job in the world of security is to bring our services and our components together and help bridge that ever-increasing gap.
Whatever the risk, wherever we detect it, whenever it occurs, Mitie Security, always prepared to identify risks, to reveal hidden danger, to mitigate and neutralize threats, prepared to react, to deploy, to confirm, and to resolve. prepared to act, to assure, to safeguard, and to protect. In an unpredictable world, Mitie Security, always prepared.
Good morning, everybody. As you can see for the video, our security business looks at ourselves in three distinct blocks: intelligence, technology, and people. We've evolved our offer to address the problems and challenges our customers are facing every day. The threat landscape's changing. Criminals are becoming more sophisticated, and the private security industry is playing a more significant role in supporting law enforcement and the security services. Throughout the presentation today, you'll see our journey from a traditional man guarding company to be the leading provider of intelligence-led security. But what does that actually really mean? Delivering a security service in the world we live and operate in today to some of the leading UK businesses and high-risk environments means we can't just deliver a people-based service. It's seen as a commodity purchase, creating little value to our customers and often bought at the lowest price. Our skill set lies in the solution design, not just providing labour and people to our customers, but working with them to identify what their problems and their challenges are and fixing them for them. Our customers are demanding more from us than they ever have done before. We're advising them how to protect their assets, protect their people, and we're playing a key role in shaping their security strategy for the future. This is where intelligence and technology are playing a more pivotal role in creating real differentiation for our customers. Intelligence underpins everything we deliver for them. Based out of the new Northampton GSOC facility, we employ a team of ex-military and ex-police analysts who are using a wide range of open and closed protocol data sources to identify potential threats to our customers. And we'll show you how this operates in our demo zone later on. We're moving our service to be more proactive, providing rich intelligence to our customers to help them shape their security posture dynamically as the landscape changes on a daily basis. When you start to couple that level of intelligence with the expertise and knowledge we've got within our operational management teams, and more specifically within our consultancy services through Source 8, we are providing a real offer and differentiation that our competition really can't touch. We've evolved the GSOC services and seen significant growth in our dedicated customer security operations centres, or SOCs as we call them, and we're providing dedicated crime management and analysis services for a number of our customers out of Northampton. Through dedicated teams working out of the SOC, we really are now at the heartbeat of our customers' security operation, providing 360-degree oversight of all the crime taking place across their business by capturing and analysing the incidents through the people and technology we're deploying on the front line. Our technology capability has always been a strength and has played a pivotal role in the growth over the last 5 years, and Chris will take you through that journey. We know the best way to create safe and secure environments for our customers is by combining the deep expertise of our people whilst harnessing the power of our systems and deploying the best technology. A great example of this is through the recent acquisition of Global Aware. And again, we've got a demo zone here where we'll take you through our proprietary software, Merlin. What we've done is understand the risks our customers are facing, particularly in the retail market: increased violence towards colleagues, increased shrink and crime, reduced police support, and rising labour costs. We've designed the system to risk-rate stores, analyse huge amounts of data, and deploy retail officers in real time to create a flexible and responsive security model. Having great technology isn't enough. We understand the problems that our customers are facing and help use technology to fix those problems. Our security personnel will always be at the heartbeat of our business, with over 22,000 colleagues providing frontline security, fire and emergency response, front of house and concierge services. We now protect some of the country's leading prestigious buildings, such as the Shard that we're in today, as well as high-risk locations at Atomic Weapons Establishment and Sellafield. We're now providing fire and emergency response services to customers as Rolls-Royce and Springfield Fuels, and have recently launched this as a new service. Supported by a dedicated mobile fleet, we can respond to our customers' growing needs as their estates change and they demand a more flexible and ad hoc security service.
Thank you, Kevin. So we take a deeper look into the competitive landscape, and the one thing we do know quite well, having a stable management team, and as Zan Tsu once wrote, make sure you understand your battleground, and we're confident we know our battleground quite well. The competitive landscape has changed significantly in the last 36 months. We've seen continued consolidation in the market, and the competition in large transformational contracts have been restricted to mainly ourselves, G4S, and Securitas. Meeting and speaking to buyers and users every day, there's been a significant shift in influence away from procurement-led processes to end users being highly influential in the buying of security services. The cycle of buying cheaply has resulted in poorly procured contracts historically, mixed with the increased threat landscape. And businesses have started to buy more intelligently now, and they see the true value in procuring the quality service. The table shows where we are in relation to our major competitors and our strengths and our capabilities. It's not just having a broad range of services, it's about what you do with them and how you design the solutions to fix the customers to deliver the right outcome. We take a deeper look into the integrated security market, and this is inclusive of residential yet exclusive of cash and prison services. It continues to grow steadily, and whilst the guarding sector has grown around 1%, this is inclusive of wage inflation, so a clear indication that we are stealing market share from our competitors. The fire and security market, however, is growing at around 3.5%. and remains one of our biggest opportunities for Mitie, and the opportunity we see more consolidation in this space as we see smaller companies trying to exit this particular market. You've heard me talk about the top 8 players occupying 50% of the market, and there's some interesting facts on this slide, and this excludes residential and prison and cash. What is interesting is 5 of the 8 of the top players have lost market share. 1 remains flat, and 2, including Mitie, have taken share. But the most interesting thing for me, and what we saw probably 4 to 5 years ago, was a huge shift towards global procurement. 4 of the 5 are global players and have lost market share. It gives me and my colleagues great confidence that there is confidence in our customers to buy a UK product, which is where we predominantly play. And if we look a little bit more at our growth over the past few years, you see that the award of Sainsbury's in 2016 and the acquisition of VSG were the 2 strategic triggers to allow us significant growth. But I expect the trajectory to continue after we've doubled our revenues in the last 3 years. But what you will see on the right-hand slide is that we've become a reputable fire and security provider in its own right. And as Christian will talk about, our position now as top 6 in the fire and security market is an enviable place to be. Our success is being built on and will continue to be built on the understanding of our markets and the alignment of a clear strategic focus and the interventions required to stay current. Our vision is to mitigate risk with actionable intelligence, enhancing integrated technologies and highly skilled personnel through our identified markets. We'll retain focus on key accounts where the value is required for the need for security as a premium service. We need to take the opportunity to penetrate existing accounts and continue to bring in new customers, providing real quality project systems and monitoring services and to those national transformational accounts. Complementing our vision is a relentless focus on building scale in sectors, investing in high growth security segments and technology, and moving towards the higher margin segments, attracting and retaining the best people, as I've alluded to, and continuing to significantly increase our customer base through reputation and understanding of customer needs and nurturing strong relationships. All of which have led Mitie to become the #1 partner in the retail and logistics sector. Following the Sainsbury's Award in 2016, where we had no retail business whatsoever. We've been successful in the awards of other contracts such as IKEA, Estée Lauder, A.S. Watson, and most recently Co-op. Mitie is now the largest share of the addressable opportunity in the transport and aviation sector, with a presence in all major and most regional UK airports and international transport hubs, delivering central search services, whole baggage screening and passenger assistance services. The combination of people and technology has positioned us as a partner that offers choice to both the critical security environment sector along with the public sector, with a high tender success rate there, confirmed by the latest award of the Bank of England and the HMRC wins. The acquisition of VSG in its London portfolio has also positioned the security business as the leading London provider of security, working with many blue chip customers, as you can see, in the corporate and the financial services sector. But what's even more impressive is that all of these sectors and the enviable list of customers contributes to what is the largest critical national infrastructure sector in the country, and something we are extremely proud of. And our strategic focus and interventions are quite simple. To create a defined proposition to target high-end customers as the UK's leading intelligence and technology-led business, increasing profile through the broader customer base across iconic buildings and strategic customers, and the inclusion of the recent inclusion of the CCS frameworks, more importantly the defence and security frameworks, providing a gateway to and the success to key government and public sector clients. Our continued investment through leading technologies and the acquisition of the global aware software, Merlin 24/7 Protect as an example. The design of new operational routines, such as the risk-based deployment model that you will see demonstrated later on, and most importantly, driving the need to change for our customers.
Thank you, Jason. Good morning, everybody. So as you've been hearing, we have invested heavily in our technology capabilities and are continuing to move towards the higher margin segments within the security space to improve our overall business mix. Our growth over the past 5 years has been underpinned by a strong and focused investment in our fire and security systems, business and remote managed services capabilities. Traditionally, the UK systems market trends at 20% roughly. However, we have responded quickly to the increasing convergence of security and IT and are seeing further opportunities to enhance our business margin mix and the overall profitability of the business. As you can see from the charts, our technology businesses represented just 10 and 13% of our net revenues and gross profits, respectively, in 2014. However, if you fast forward 5 years to today and FY19, you can clearly see the positive impact of our technology business with the doubling of our margin contribution. So let's look in a bit more detail at the Mitie Fire and Security business. As you can see from the chart, our fire and security business has enjoyed consistent, strong year-on-year growth and continues to outperform the market and the growth of that of our competitors. Typically, the UK systems market grows at 3 to 4% CAGR, and the vast majority of industry sources are predicting a similar growth pattern over the next 5 years. However, based on our performance, we expect the growth of the sector to track marginally above the predicted rates due to rising crime, customer demands, and the ongoing advancements in technology. In terms of our current position in the marketplace, we have moved from what was a relatively unknown systems installer 6 years ago, as Jason said, to a top 10 systems integrator with end-to-end fire and security solutions capability in the UK. So how have we achieved this growth? Well, in essence, our strategy has been focused on 3 key areas. Number one, we have shifted our market and customer focus from a transactional and strategic approach, focusing on larger national multi-site clients where we have strong traction and referenceability. Number two, we have continued to invest in our technology capabilities and have evolved our go-to-market proposition. We have transitioned from what I would class as a traditional product-based solutions business to a provider with an unrivaled suite of services across all technology disciplines, further strengthened, obviously, by the acquisitions of both VSG and Global Aware. Number three, we have successfully leveraged and penetrated our wider client base across the Mitie Group and our security guarding business. With a number of large national customers across our portfolio, we've expanded our geographical footprint, our technical expertise, and overall share of wallet for the business. However, possibly the most important aspect of our growth curve has been the positive change in our overall business mix. When I joined the business 5 years ago, over 70% of our business was installation-based or projects. However, with a real drive to improve the predictability of our results, we've focused on our recurring revenues, which today represents nearly 60% of our annual turnover, a real change. Now let's take a closer look at our technology journey.
Complacency is definitely not the answer. Over the last 8 years, security business has developed the most secure, innovative and resilient technology category 2 alarm centre, Mitie. Invested in the Validate access management system, and bringing together our fire and security businesses in 2016 gave us the opportunity to drive significant growth in the market, particularly over the last 3 years. Investments in real-time reporting tools that allows us to build up risk profiling of our customers' premises, and the deployment of risk-based deployment models helping our customers make informed decisions regarding their security and their spend. And we shouldn't forget our social value agenda. As we've already said, we employ over 40,000 people in our sector. And the award-winning community guarding model saw Mitie and Sainsbury's jointly fund an initiative where security was taken out of multiple locations, turned into street wardens, where teams engage with the local communities, and a large homeless challenge, taking food and water to the homeless, keeping crime away from retailers and business crime, helped reduce business crime significantly in the Brighton area. In partnership with the National Business Crime Solution, the Police and Security Initiative and the National Violence Reduction Programme, Mitie are now the leading force in rolling this initiative out across Nottingham and other major conurbation and challenging areas. As I've said, we cannot stay still and we must continue to innovate. We must continue to invest, as we have done with the recent Global Aware business. I will invite you up at the end to come and speak to Terry Darnell, who is the expert in that, and we'll keep you enthralled for 5 or 10 minutes talking about the intricacy of that system that's helping our customers. But as we look forward, and our vision is really focused around 6 key pillars. I will talk about the first one, being to maintain or retain our successful commercial model, which has allowed us to win an overall 1 in 3 bid rate. And it's distorted by small works in the technology space. And this is versus an industry average of 1 in 5. More importantly, we must maintain a win rate. Maintain a win rate and increase it to 1.2 in strategic areas and specialist sectors of which we choose, such as retail, transport, and aviation and high-end corporate sectors. We must keep focus and maintain excellent customer relationships and a retention rate of plus 90%. That's an increase from 80% 3 years ago. And we should remain the leader in the sector with sector specialisation and work on mutually benefit commercial terms that are sustainable to both ourselves and the customer and equal in terms of risk.
Okay, so we all now know that we live in a rapidly evolving and connected world, and you only have to look at the developments in your own home where artificial intelligence is built into many of the electronic goods and mobile devices that we possess. From a Mitie perspective, our technology offer continues to evolve and is literally at the heart of every single customer conversation that we have and strategic opportunity that we touch. In terms of our core offering, we continue to expand our range through leading-edge supply chain partners, and unlike many of our competitors who focus on closed protocol systems, we are completely technology agnostic. In fact, many of our recent wins have stemmed from our ability to deliver and support a wide range of technologies, which is seen as a clear differentiator by both the market and also our customers. We are continuing to adapt to the ever-changing landscape and keep ahead of the technology curve on behalf of our customers, and we are actively adopting intelligent technologies across AI, machine learning, algorithmic analytics, and sophisticated cloud-based services. Moving forward, the development of our customer value proposition will be based increasingly around optionality, driven by their specific needs and informed through our intelligence-led approach. So that leads me nicely onto the new capabilities that we have acquired through the recent acquisitions of both VSG and Global Aware. Essentially, there are two key areas that we've increased the breadth and depth of our service offering, specifically relating to risk and intelligence. So firstly, we've enhanced our real-time intelligence offering with the addition of GSOC services, which is providing us with much greater control and visibility of the threat and risk landscape. Furthermore, this has given us a more collaborative working relationship with both the Police National Database and the Government Agency Intelligence Network, otherwise known as GAIN. Secondly, through the strategic acquisition of Global Aware, we have gained an industry-leading proprietary software platform, Merlin Protect 24, enabling increased efficiency when developing intelligence services for our customers. As you saw from the video briefly, the real benefit of this technology is that it takes our customers' operational data and turns it into both meaningful insights and actionable intelligence. This development, I think, firmly reinforces our position, Jason, as the leader in the field.
Thanks, Chris. Other way. Okay, so how have we leveraged our sector expertise within our customer base? Our SOC has become a real centre of excellence, particularly in the retail sector, where we are managing our customers' crime management capability in a centralised location for them. As you can see on the slide, the middle picture shows our Marks & Spencer SOC. So historically, what would we have seen and how would we have delivered services to M&S? So a number of in-store retail officers providing a reactive service to in-store crime. Localised CCTV monitoring with an officer stood behind a podium similar to this at the front of the store. Store detectives deployed based on data 3 months old and with minimal impact and return on investment. And little analysis and correlation of the data and trends across the M&S estate. What are we delivering through the M&S SOC now? A centralised team of crime analysts feeding intelligence into the stores and into our frontline officers. Proactive store detectives teams deployed based on data. We're pointing them to the high-risk stores and the times of the day when most crime is happening to have the maximum impact and return on investment for M&S. A centralised CCTV monitoring using the technology we have to support the in-store teams with virtual patrols and tracking of both known offenders and our own officers to support them. And a full understanding of the crime trends and hotspots so we can be proactive in managing risk for the customer. The benefits we've realised for M&S, it's a more cost-effective way of delivering security. There's an increased return on investment for both store detectives and retail officers. We've had a positive impact on shrink and a reduction on in-store violence towards store colleagues. And better case file management resulting in improved police response and conviction rates. It's an award-winning partnership, and this year alone we've won awards at the Retail Risk, Fraud Awards and at the Security Excellence Awards. Our customers are telling us that none of our competitors are advanced in delivering this type of service to customers. But what's next? How do we evolve and how do we stay ahead of the competition? The next slide you can see is a case study of a recent award in the corporate sector and one that we'll be announcing in early January. 12 months ago, we started to engage with the customer to design the solution in the schematic that you can see. So what is it we're going to provide? It's an end-to-end service through Mitie, GSOC and Merlin to manage their security deployment based on our ability to risk rate their buildings dynamically. We're deploying AI and machine learning in high-risk locations, providing early identification of suspicious activity or pre-violence indicators to be proactive in how we manage their risk. We're going to issue real-time intelligence, allowing a dynamic approach to risk management. And this really is the next evolution of the service that we've been delivering, and we have pushed the boundaries in certain areas. There's been limited deployment of AI in this country in the security market, so we're breaking new ground. We've got a strategic partnership with Pangea, who have developed a cost-effective way of deploying AI on the customer's existing IT and security infrastructure. We're using Merlin 24/7 Protect, and we've evolved the risk profiling of each site to include not only data feeds from incidents and open source crime stats, but multiple additional feeds from the technology we've deployed to our officers, body-worn video, personal safety devices, and asset status for alarms and CCTV. Using this enhanced data and intelligence, we're able to forewarn nearby properties if an incident occurs or if there's a change in the threat level. By combining all our security capability together into one centralised hub, we've seen reductions in violence and impact of incidents through multi-layered security. Violent incidents, both verbal and physical, and a reduction in cost as we've expanded our risk-based deployment model where we're delivering security personnel when and where it's needed. We're already in advanced talks with multiple customers on how we can facilitate data and intelligence sharing. We want to help drive collaboration across our customer base and the wider security industry. If we determine a criminal from one of our customers' premises, why not share that with the neighbours and help drive crime away from the local community?
Thanks, Kevin. Our final second case study is one that captures the essence and the practicalities of everything you've heard spoken about today. That whilst the provision of this particular service started in 2016, the partnership started around 3 years prior to that. This account is Sainsbury's, and you heard Phil allude to it earlier on, and how it started back in 2016 at 14 million. Now, having a deep understanding of this customer and indeed the retail sector, we decided to set up a retail sector back in 2014 and bring in the expertise we would need to drive this sector forward. We knew that the sector was failing, we knew that our customers were suffering, and we knew the colleagues and the public were unsafe due to the headwinds it faced in increased business crime, reduced police resources and rising employment costs. Mitie designed a roadmap to success in 2016. It was awarded the contract to a value of 14 million per annum to deliver security services to 400 locations. Within 6 months of the account starting, it grew threefold across, and we were providing services across all 1,800 locations. In January 17, the Merlin software was introduced and developed, saving the customer around £1 million through the eradication of multiple risk management systems and data mining tools. In September, and following further development of Merlin, and turning data into intelligence and insights, we began to risk profile the 1,800 locations, leading to the first ever risk-based deployment model in our sector. Also introduced was the remote monitoring of colleague safety following the deployment of 5,000 lone worker devices. In December 2017, the elite officers were introduced, a team of highly trained and ex-military officers to deal with increased crime, antisocial behaviour, and provide safety to customers and colleagues. During September 18, Mitie was awarded the Integrated Facilities Management account for all 14 corporate locations to allow us to provide all Mitie services to Sainsbury's across those locations, inclusive of the Argos and Sainsbury's logistic account. Mitie recently was awarded the contract for the design, install and maintenance of the fire and security contract. And today we are already undergoing a holistic service redesign of this contract. So an indication that time does move fast, but the net result of a true strategic partnership and an account that has now grown 8 times its original size. So I hope you agree that our business has been built on reputation, expertise, and a full understanding of our market and competition. We have a clear understanding, we have a clear, strong brand and clear identity. Mitie Security is an intelligence-led business. At Mitie, we know the best way to create safe and secure environments for our customers is by combining the deep expertise of our people whilst harnessing the power of our systems and deploying the best technology. We must stay aware of what is happening in the future. And the future of our sector is focused around the improved productivity through AI and machine learning. Security is a vital enabler and is high on the agenda of our C-suite colleagues, where they're designing security in to their businesses and to the workspaces of the future. We must continue to be able to demonstrate a true return on investment to our customers. And one of our key areas of focus as we move forward, and one of our fastest growing sectors, and we're very proud of, is to continue to influence government and public sectors, not only in our sector, but in terms of reducing crime across the country. Ladies and gentlemen, thank you for listening. I will invite any questions. After the questions, we'd like you to come and talk to Terry Darnell, who will take you through, answer any questions around our Merlin Global Aware, and we'll like to introduce you to Rachel Webb, who will talk to you about our Global Security Operations Centre services. Thank you. Any questions? Hi.
Hi, Sam from Stifel. Technology services, you say it's gone to sort of 16% of sales over the last 5 years from 10%. If we were to look 3 years ahead, where would that get to? And then secondly, on cleaning, you talk about sort of technical cleaning services. Could you just give an example of something that would be that is non-commoditized? Thanks.
Yeah, so James can take the one on cleaning. And in terms of technology services, I think I said I would expect the same growth trajectories that we've enjoyed most definitely for the last 3 years. I think as we continue to focus in what I would call technology is, and not just fire and security services, I think that will continue to differentiate us. So the direct contribution from technology itself, I think you'll see an impact in the broader growth of our business as we invest in the technologies to enable our people offer far more significantly. But I think I'd like to think we can continue with the same trajectory that we've been on, most definitely for the last 3 years. Christian, would you agree with that?
Completely, yeah. I think strategically then, our focus has been around, as I said, the larger national clients. We're winning those, we're retaining those, we're growing those through different technologies and deeper penetration. So certainly that's the kind of direction that we want to move in. So.
And margin as well, Jason? I mean, generally we get a higher margin.
We do. Yeah, much higher margin in relation to the technology services business. So it's a great mix for and complementary to our people services business as well. So
yeah, I think margins has historically been sort of 24-30%, which and they have come down. Products are cheaper. There has been sort of a congested market, and probably those margins aren't there for the small to medium-sized businesses, which is why you're seeing consolidation. The good thing is I think we can realise more richness within those margins by winning some of those accounts and looking at the opportunity to infill and grow that business for us. Okay, James.
So in terms of cleaning, I think there's twofold there. One is seeking out the value versus cost client base and making sure where we're able to add value, we're rewarded for that. So that's that sector focus. In terms of technical cleaning or specialist cleaning, that can be areas of high hygiene where that level of cleaning and the quality that you provide is a must. There's no room for failure or poor quality. Clients in those environments will pay for that service and that guarantee of quality. And it can be things like high-level window cleaning. It is a rapid response service where we are responding to incidents, whether that be fire or flood, and they need immediate recovery of a building, often multiple floors. And I have to say the team there, the technical services team, are very good and nationally based and are able to respond overnight quickly to those events, which do occur quite often across the country. I hope that covers that for you.
Maybe the example, James, of the recent mobilisation in pharmaceutical manufacturing, that's obviously a key area as well for us, isn't it?
Yeah, so we touched on that, and again with that recent win which we mobilised literally a week ago, that's where we're working in high-end environments where within pharma, of course, cleanliness is literally next to godliness for them. So we have a high expectation there, and again the client demands that service, but they pay for that service as well.
And I think that's an important. Sorry. I think that's an important point around cleaning. And we alluded to the fact it's a highly commoditised environment. It's not our intention to stick within a highly commoditised environment. We shouldn't be shouldn't be afraid to have the discussions to create value in those contracts. But our focus, as we've said, will be in such things as pharmaceuticals, in such things as clean rooms, atomic weapons establishment, where cleaning is an absolute necessity, or high cleaning is a necessity.
I think the other thing is the chart that James showed, that 75% of our engineering technical services have a cleaning bundle in them, and then 45% of
That's correct, yes.
security have a cleaning bundle, and that's increasing. So one reason why we stick with cleaning as a key part of the opportunity to cross-sell as well.
It's Gerd Zonneveld, Canaccord Genuity. Just a couple of questions on margins, as was touched on before. Just two things. Firstly, is there any correlation between sort of your market position and your margins? In other words, if you're, say, number one in a market like you are in, say, security for transport and aviation, and the margins you achieve in that sector. And then the second question, you mentioned that particularly within cleaning, you're looking at trying to sort of look at the higher margin sectors, if you like, going forward. How do you go through that process? Because I guess that, the margin will depend on the type of contract you may win. It may depend on whether it's integrated or not. It may depend on the growth prospects. So how do you go about assessing that?
Yeah,
Thanks.
Good question. So we'll come to James in a moment on the cleaning question. In terms of the correlation between the margin and market share, I think when you look back at the competitive landscape, and we offer the broad range of services, and then if you look at the most recent analysis, sort of the Mintel and Infolog analysis, where we can have a good look into our competition, the security market is typically a 2.5% to 3% market. The fact that our margin mix is more concentrated, we're sort of around the 4.85% in security, but that's by offering and deploying the range of services of people, complemented by the technology and the software, and the commercial modelling with our customers as well. I mean, we've moved away from the binary, it's £10 an hour model, to more of a shared risk and reward model, where we drive the right behaviours in terms of managing our customers' costs by focusing on the outcome, and then the risk and the reward is shared across both. So I believe there is a direct correlation to the range of services rather than where we are in the market. Okay.
So actually that probably continues the conversation for our cleaning piece. When we refer to sectors, it's about sectors that are looking for value over cost, where cost is important, but actually the quality and the value that they hold our staff in is very important to us as a business. So where we're pushing on our foundation living wage agenda within Mitie, where clients are supporting us with the London living wage, that all contributes towards a sustainable margin. If you think about the slide I presented earlier, that quality, efficiency and sustainable, that's not just about our vision, but that's about our customers buying into that. And we will be selective around the customers that we choose to work with moving forwards. Where they're looking to pay a premium wage for that service, along with that will come a sustainable margin. And then going back to some of Jason's points, there is a technology mix and a technology play that we can apply in the cleaning market, but we need clients to come on that journey with us, be brave, be challenging, and let us deliver the service in different ways, applying those new ways of working. So I hope that gives you some of the confidence you need from that question.
Bilal Aziz, UBS. You mentioned you were tech agnostic. Can you perhaps explain practically how that works out and where that places relative to your competitors? Thank you.
I can actually, yeah. So when I talk about being technology agnostic, so we've got partnerships with all of the large vendors and equipment manufacturers out in the market. So that gives us an awful lot of breadth and choice of technology, which when you look at our diverse client base and the markets that we focus on, gives us more flexibility and agility to compete. So in terms of our bigger competitors within the market, they do tend to focus on 1-2 dominant platforms. And unfortunately, as you know, the market is moving away from closed proprietary locked-in technologies to an open protocol, non-proprietary kind of solution. So, and particularly as we move towards smart and intelligent buildings as well, when it's literally plug and play, camera onto a network, etc., the need for open devices becomes an even more important element of our service going forward. So,
and there is a there is a direct correlation between those businesses that work with closed protocol systems and those that work with the best systems in the market. And our customers want to be given choice and optionality. Technology moves so quickly, so we have to move with customers. And if we work on sort of single platforms and closed protocol, we will not grow in this sector. That's a key thing for us.
Yeah. Okay.
Any more questions? Thank you. Please do come and talk to our team if you will. Are they with us?
So thank you very much for joining us today. I'm very excited to present to you technical services and to show you what is the future ahead of us. I'm Carlo Alloni. I'm the Managing Director for Technical Services, and I joined Mitie 2.5 years ago. And I would like to speak today about the technical service journey. Most importantly, what is going to happen in the next 2 years, about Project Forte, about embedding more and more technology-led solutions, and that resulted in participating in a larger share of the wallet of our clients by raising the participation in the value chain. And finally, having a case study showing really what we did in one of our most prestigious clients. So let me start to telling you what is technical services. Technical services comprise a couple of activities that are from the most basic ones, that is the top left, that is maintenance, evolving then, if you look like clockwise, into the most sophisticated ones. So we go from integrated maintenance, which is multiple product properties, multiple service lines, into projects that comes on the back of FM. We go into occupier services where we advise our clients, and then we go to energy management where we're seeing lots of momentum, and then really arise into the total building review that I'm going to show you later. That is basically end-to-end review and optimization of our clients' real estate and properties. The big important element that we introduced since Phil joined is really the obsession for customer experience and putting data into action. So what you're going to read today, what you're going to learn today from technical services, is that data sits at the very center of everything we do. And the most important thing for us is that putting those data insights into actions and solutions for our clients. When I joined 2 years ago, we established clear priorities to the business, and we have a much more focused go-to-market around the key strategic clients and key sectors. That was pretty much, let's say, driven centrally by them forcing, as you see in the slide, in reduction of the tail of clients, by focusing on strategic clients, we've been reducing some non-profitable clients and or pricing up clients that were not either profitable or not paying on time. Then we have as well growth in variable projects and works. We established a new division that is the engineering project division that is turning around 180 million a year just in engineering projects. We do see as well the start of embedding technology-led solutions. And this is why from April this year, we have energy management into technical services, we have connected workspace into technical services, and we have occupier services into technical services. How do we then create more value to our key strategic clients? That is one of the priorities that we created. And then finally, accelerate value creation by changing gears in unleashing operational efficiencies. We did Project Helix, technical services saved 9 million. Now we're launching Project Forte, where we do see 25 million gross coming through Project Forte. Now, nothing of that could have been done without a fantastic team, and I'm proud to say that we are the best in class, best in the industry team in FM, and we have from the president-elect of our SES to as well the IWFM Professional of the Year. We have industry experts in every field, and now we have a very stable team that is going to remain for the near future, or long future, I hope, in delivering the transformation. We have been making steady progress. Of course, I would like to have to do even much more, but if we look at the last 2.5 years, we've been doing gradual, steady, robust progress into all the different indicators. Technical services, we have been growing revenues by 1%. If we exclude international, and why exclude international? Because as a strategy, as a conscious decision, we want to retrench back from international and really giving all the attention possible to UK and Ireland. Growth would have been of 2.5% rather than 1%. The good news here about revenue is that our strategic accounts, that was, again, one of the strategic decisions that we took, they're growing at around 5.7%, and they keep growing healthily. On the other side, if you see operating profit, we have been growing on a CAGR of 4%, and despite we've been reinvesting the vast majority of synergies, we really wanted to trade off, profits for revenues. And instead of being revenue hungry, we want to have quality revenues that drive variable works and a much more solid profitability. And both unbilled debt and aging debt, unbilled debt and billed debt has been reducing in volume, but as well, aging got much better. So we have a much more up-to-date 30 days age debt and not anything that is unrecoverable. I'm very proud of the progress, but there is much more that needs to come in the coming years. If you look at the operational metrics as well, they're moving in the right direction, and they are pretty much underpinning the financial results. So we are constantly increasing productivity. We see, for example, year-on-year 2% productivity increase that releases 40,000 work orders without additional FTEs. We also reduce temporary hires by 14%. We also reduce off-hiring equipment by 33%, while reducing voluntary attrition by half. It's still not where I want to be. 12% is still not where I want to be. I want to go down to 9 or 8%, but the progress has been there. And it's also making sure that we invest as much as we can in learning and development. This is why we are committed by having additional 150 technical apprentices by the end of the year. This push into technology started by deploying handhelds and smartphones and tablets to 100% of our workforce. Everybody that can be connected in our company is connected with a digital device. Paper is not more a reality in our company when we can allow them to be connected. And that also created a situation by which now we ingest 4.3 billion data points a year from 100,000 sensors in 5,000 critical systems. And that has been ingested into our data lake that lays on Microsoft Azure, sitting in Bracknell in our service operations center. Talking about the reduction of the tail, just to give you some concrete figures, our last wave of tail reduction saw 70 contracts leaving Mitie on purpose that we said, okay, we can't serve you with the current costs. So 70 contracts were canceled. The remaining contracts that were uppriced by 10%, where we get positive margins now, and that translated in an average increase in margin for the mobile business of 1%. So what we're saying is that cutting the tail is a strategy that is starting to pay off in profitability. Our efforts are finally showing some good results with our clients. So NPS is up. We are up plus 30, which is a good measure. And if we measure actually the end user of our clients, the NPS, most likely in most of the cases is double that. So we do some measures with our end user clients, and we see that NPS is around the 80s in the facilities maintenance that we are maintaining. We do see some very important victories with BMW. We now dominate the auto manufacturing segment in the UK with Toyota, BMW, Peugeot, and others. We do have as well a very important break-in in GSK in pharma. But even more exciting for me, as a technology background, Google DeepMind, that is the AI branch of Google, selected Mitie as the partner for FM, recognizing that we share the same passion for data and technology. The trust that our clients are putting in us is paying off in money. And why? Because now for every pound that we have in fixed contracted work, we're able to develop an extra 1.3 pounds in variable works. That is an extremely important measure for me. That means, are we really farming the ground? Are we really being able to show our value and therefore expanding into the value chain and the share of wallet of our clients? And the answer is yes. That is so strong as a trend in my division in technical services. By providing excellent service every day, by getting insights and actionable data, we can then sell on the top of that projects, small works, lifecycle management, asset management, replacement, and critical infrastructure maintenance. And that is translated into 1.3 pounds in addition to the 1 pound with higher margin than the FM market. The pipeline is very strong, and that is again I would say very positive news for technical service. We have a 4 billion pipeline. We have incredible differentials compared to the competition. Number one is that we are the largest mobile workforce in UK and Ireland. We have 2,300 mobile engineers in their own vans with their own kits, completely connected back into the motherhood, or the mothership, as I say, by either their PDAs and tablets, and in the future, just probably one clients, what I call the connected engineer, that is an augmented reality lens that I'm going to show you later in the slides. The second point that for me is extremely important and relevant is that we are really taking seriously the workflow optimization and data harmonization within the company very seriously. And this is why Project Forte, that I'm going to describe you in detail later. No one is doing such a courageous and important data cleanse exercise to put data at the very center of everything that we do, removing labor and really double down in digital. Point number 3, we're the only end-to-end self-delivery company that can cover the entire array of services within technical services. As you can see in the table at the bottom, we cover in a self-delivery fashion all the different aspects of technical services, providing a one-stop shop for all the problem fixing of our clients. Now, we did Mitie 1.0 transformation, and it's a lot about starting the digital journey, it's a lot about standardizing processes, it's about embedding incentives to the front line, it's about creating the common culture and the common standard operating procedures. Now it's time to accelerate value. Now it's time to shift gears and to launch Project Forte as most important initiative, to really embed project and energy saving sales into our strategic accounts, via as well some targeted M&As. And finally, having the digital reality or digital driven propositions being embedded in each and one of our offers and as well in the delivery model by having the service operations center fully functional and making sure that we move from a reactive kind of service into a predictive kind of reality. We will reach our ambition by focusing on 3 pillars. Pillar number 1, the most important for me, that is contributing to around 70 basis points for the company, is Project Forte, and I'm going to show you in detail what Project Forte is all about. Pillar number 2 is about building a technology-led proposition and really embedded into the client's offering, and as a result then expanding our participation in the share of wallet and in total cost of ownership, moving the dialogue just from OPEX, but to OPEX plus CAPEX plus gain sharing and other non-addressable at the moment spending that our clients have. How these will be delivered is going to be pretty much, anchored into financial results, cash-back financial results that we do see Forte delivering, as I said before, around 25 million gross, 10, 15 net, falling through the bottom line. You can see the reference on the right side on Paul's slide at the beginning of today. We do see the technology-led solutions that is technology penetration and procurement counting for 45 basis points around for the company, and that is 5 million around in technical services, and then continue growth in strategic accounts. That is, one is simplifying the way that we serve our strategic clients, but in this case as well, more importantly, is expanding sales for energy services, building optimization, Plan Zero and sustainability, as well as variable works and project work in our strategic accounts. So let me start telling you a little bit more about Project Forte in detail. What does it mean? My vision is to have a very transparent, frictionless, user-friendly, predictable way of interacting with our clients and our workforce. That is not present today in the market, and this is what we want to lead. We want to really deliver a fantastic customer experience to our clients and ultimately allow our team members to do an exceptional job. And Forte is all about this. It's about re-engineering the workflow of our processes from order to cash. Forte has 6 very clear deliverables. It's about upgrading Maximo, it's about the interfaces, and AWS stands for Amazon Web Services, so it's the cloud. How do we really create a 24/7 resiliency around that? We're talking about data and MI, and it's how do we really cleanse all the data, and how do we make the management information that comes out from operations visible, transparent, and accessible real time. It's about refocusing and reshaping our service desks inside, but as well in the way that they work. And then final part, that is the LS2 box, is about our billing capabilities. How do we really make a process super sleek in order that we can reduce working capital by 10 to 20 million in addition to our normal plans? Let me start with the first one, Maximo Core upgrade and the interfaces. Maximo Core is going to go to Maximo 7.6, that is the last and most advanced version of IBM Maximo, which is the leading CAFO system in the industry. Maximo Core as well is going to be capable of artificial intelligence algorithms and self-learning machines that are going to allow us to automatically and digitally doing the proper triage till the dispatching and at the end the billing in a case management fashion of a work order. So that is going to drastically eliminate the presence of human intervention in receiving the work order, triaging the work order, and dispatching the work order. The second point that is going to be fundamental is on the transformation of the service desk. And once we're going to go down from 7 service desks to 2 service desks, we want as well to implement a system that, again, via artificial intelligence is going to maximize the productivity of the engineer in the day. It's going to automatically calculate the routes. It's going to automatically prioritize the jobs by value, by urgency, by SLA, and by contract type, by selecting the right skills of the job at the right time of the day. And that is going to also translate into much better management of the supply chain. If you remember, 9 million of the 25 are on engineer productivity. There are 7 million as well in supply chain. This is not rebates. It's not double counting from the procurement savings of better rebates and better volume discount. This is a much more effective management of rates and hours that they go in a specific work order, but which we can as well assess the productivity of our supply chain, not just of our employees. The third block that is MIN data is the block that every company usually in our segment tries to avoid, but we're courageous enough to attack it and to really solve it. The conundrum of the FM industry is not about the technology, it's about the quality of the data that we have. And that is going to be transformational. We are cleansing all the data when it comes to locations, assets, customer entitlements, subcontractor agreements into one system and having a very sleek platform with cleansed data where we can then deploy artificial intelligence, robotic process automation, and other technology that it can be supported by this cleansed data at the bottom. I'm going to show you later the dimension of what we're doing, and I'm sure that this is going to be transformational for the industry. It's going to unleash a lot of potential. If you go to the last block that is about the building platform, today our platform is in Oracle. What we want to do is change the process. So what we are doing is that on Maximum Core, we're standardizing all the processes. So we're making the order-to-cash workflow sleek and standard for all the different countries, leaving a very minimal customization at the end, just for customer experience purposes, while we really standardize all the back end. Then we want Maximo to become the only source of truth by collapsing information about our self-delivery capabilities, our subcontractors and partners, and the other one about consumables. And then being able to produce the bill and automatically moving into SAP, and SAP then consolidate with a part of the other company, or one of the other parts of the company into the general ledgers. We do believe that the DSO will dramatically fall due to this simplification in the process, and as well we're going to be able to release around 10 to 20 million more in working capital. Forte will be delivered by December 2020. There are very clear defined deliverables. This is a high-level timescale, but please don't make any mistake. We have lots of details behind, and my ambition is not to go into the different points with you. But I want to give you the comfort that every step, every dependency, every risk has been carefully mapped. The governance has been really micromanaged on a weekly basis by the project team, by me and my leadership team on a bi-weekly basis, by the executive leadership team as well in another fortnightly basis, and even by the PLC board chaired by our chairman, where we review the progress of the project. For the moment, we are on track, and this is the good news. We already defined the standard 100 process that we're going to be following. We already cleansed 83% of the data set. We already cleansed 100% of the location and 100% of additional data that is coming from additional contracts. We have been delivering the electronic timesheets, so everybody now in our workforce doesn't need to submit any more timesheets on paper. It's all automatic, and it goes into the bills of the clients already now, as well as all the consumables. They are all digitally controlled, so we don't need any more receipts to go flying around. It's all digital, all scanned, all mapped into the single system. Now, the two elements that are new to this is one, on the supply chain, we're partnering with Wipro. We deployed robotic process automation to do the bill and purchase order, work order matching, by which if things are not really 100% equal or they are not mapped, they get rejected or they get reanalyzed. Therefore, we have a much more control on the cost leakage when it comes to our supply chain. And the other thing is that we engage PA Consulting to have an independent audit as well on Project Forte to give us even more confidence about the interdependencies, the risk mitigation actions and benefits. The size of the project, and this is why I'm absolutely moved and passionate about it, because it's unique in the market, is we are cleaning 700 million data fields. We are having 20 million more data fields that we are ingesting into the system to make sure that our controls on the jobs and assets is absolutely spot on. We're having 800 customer agreements and 3,800 supplier agreements to really upload and cleanse and make sure that they're all standardized. And I believe that by this, when it's going to be implemented, it's going to be a fantastic base to really launch the digital agenda of FM in the industry. The benefits are clearly defined, and we do see these levers. So engineering productivity is around 9 million. Remember the poll showed that in Project Helix we delivered 9 million already. So this is feasible. The question is that we did 9 million with work harder. Now is what we need to do is 9 million in work smarter. So we need to digitalize and really re-engineer the workflow. It's 3% only of the addressable scope, so that is very feasible and we can do that. The 4 million is about the service centers redesigning and re-engineering. One is shutting down service desks from 7 till 2. The other one is having a much better grip of the dispatching and triaging by removing human intervention in the processes. The other point is about supply chain savings. It's not rebates. This is about the cost leakage avoidance, is what I said. Mapping hours and rates with our actuals and bills. So really making sure that we are really micromanaging the productivity of our supply chain. Comprehensive management is 3 million. Again, it's 2% only of the addressable. That is revenue leakage. We know that in our industry we have a compot that is called comprehensive activities that we cannot charge back to the client. Today, the screening of these comprehensive activities is done manually. We're now deploying, again, the technology to have everything in the database, and then there are going to be artificial intelligence or RPA screening what is chargeable and what is not chargeable. It goes directly in the billing application, reduces the DSO, and definitely is going to avoid revenue leakage. The other 2 million is streamline remedial processes. So we have an enormous team of quotes. Yes, it's coming, you know, our additional 1.3 pounds for each job, for each pound of fixed job is fantastic, but it's been done by labor-intensive activities. We need to create a way that is digitally enabled to create those quotes much more quickly, with less labor intervention. We believe of these 25 million, 10 to 15 are going to drop into the bottom line. If you look at the operational drivers that are anchoring the financial results, we are monitoring those 6 metrics, and it's pretty much about the evolution of first-time fix, the percent of engineer time traveling, since we have a large workforce in mobile, 2,300 engineers. Reducing that should mean that we're going to increase utilization, that is the time that the engineer spends on task doing the job. The most important one for me is the sphere on the right, that is the work time versus the estimated job. So today, we have opportunities to do the job quicker by having better tools, by having much more information at the hands of our engineers, so they can close the job quicker and then move to the next job by accelerating first-time fix. Then by introducing more automation and digital, we believe that as well the ratios from frontline to managers to planning to engineer ratio are going to be expanding. We believe that we can find some synergies there. So we're going to be monitoring not only the cash-back savings that I presented in the previous slides, but as well the evolution of the operational KPIs into that direction, since financial results are very much anchored by what we do on the ground. If we move to the second pillar of our strategy, is building the technology-led propositions into our key strategic accounts. And the strategy is based on 3 crucial deliverables. The box in orange shows the ingestion phase of information. And it could come from clients, it could come from team members, it could come from users, and is ARIA. That is a fantastic interface that we developed, proprietary, that we already deployed in 20 clients, and we keep expanding in others. The second part of ingestion information is capturing all the assets in a 3D manner. And I'm going to tell you more about that. But let's start from ARIA.
Welcome to ARIA. Welcome to ARIA. ARIA is a workspace user app. ARIA is all about making things easy. Things like booking your ideal meeting room and finding it. Like ordering your cappuccino, just the way you like it. And getting a fast response and assistance when you need it. ARIA keeps you informed, so you never miss a trick. ARIA from Mitie, making things easy.
Is this extremely sleek interface that we developed and that we're deploying to our strategic clients, where a client or a team member can open a job, can request a job, can track the process of a job, can check the space available in their buildings, can check the well-being, and as well can have a bi-directional communication with either a service operations center or with the service desk manager on site. The second point that is extremely interesting is less flashy than ARIA, but is equally important, is very much into the hardcore, the technical services. Everything starts from an asset. So one of the other conundrums that the industry has, one is definitely data. The other one is, can we really capture the assets in a good way so the engineers know what they're doing and what they should be doing? And that is what we developed, a 3D asset capturing in our asset storage database that is in the SOC, in the Service Operations Center. So for every asset that we go in during mobilization and during the lifetime of the contract, we are capturing the asset in a 3D fashion. We load them back into the Service Operations Center. Every asset has a diagram behind that allows then the communication remotely from the Service Operations Center to the engineer on the front line to speak and looking at the same things. So the engineer on the front line can get remotely assisted by the best of Mitie sitting in the SOCs. That is very powerful and transformational because usually we are never as good as the last let's say, person that touched the asset. So if we can provide all the expertise that we have centrally in Mitie to the engineer in the front line to execute a job, and they are looking at the same thing, this is going to make sure that the first time right is going to increase, and as well the amounts of jobs that are going to get closed during the day is going to go up. Talking about the SOC, let me show you a little bit what is it. And the SOC is what is the center of our, let's say, operations. It's the brain that stands behind everything that we're doing. And today, sitting in Bracknell, and I invite you, I would love to host you in Bracknell whenever you guys want, to show you it in working and in practice. Let me show a little bit, introducing to our Technical Service Operations Center. The Service Operations Center is where we remote the critical assets of our clients. And powered by artificial intelligence and algorithms and data scientist capabilities, we can monitor 24/7, but as well, most importantly, predict problems before they happen.
With the SOC, we will be picking up the right skilled engineer with the right data, with the right parts, going to that asset and repairing it in the first time. And that's the intent which we want to achieve with our SOC.
I want to move from a reactive kind of reality to a predictive, frictionless, and fluid situation, by which we predict problems before they happen, and by which clients they can sleep calm because their assets are monitored 24/7.
The engineer walk into that asset to look at that asset, that all information will be readily available in his hand. That's what SOC provides to our connected engineer.
Eradicating downtime is at the very center of everything we do here. And the SOC plays a crucial role in that. By monitoring the critical assets of our clients 24/7, by predicting the problems before they actually happen, and by remotely assisting the connected engineer, we make sure that our clients can focus in their business 100% while we take care of the rest.
Think about a scenario where before even people come into the meeting room, one of the Mitie engineers already been there and he already know what is going to fail. He fixed it. The user experience will be seamless. And that's where we want to be. So we are always there, behind the scenes, fixing the issues before it even happens to you.
Our brain, and is where we put the best of Mitie at the service of the front line. We are equipping there with full connectivity, with algorithms and machine learning, and we're designing models by which we predict failures. Now, if you predict a failure in a meeting room, fine, it's no big deal, but predicting a failure in a data centers, predicting a failure in a manufacturing plant, predicting a failure in critical environments is the real difference between a strategic partner and just a vendor. The other point that is extremely important to me and what I want to introduce you is that we believe that 30% of the planned activities can be remotely done. So removing the need of having engineers always dispatched to sites because we can interrogate remotely the assets or the BMSs is going to be transformational. Likewise, we believe that we can cut by half, in average, the time of duration of reactive jobs. So if you look at this case, that let's say this is an average of 20 hours for a job, just for sake of argument, the job doesn't get done quicker because there are many human intervention during the processes. There are documents and approvals that needs to happen left and forward. By introducing the SOC and by having the right expertise at the fingertips of our engineer in the front line, we believe that we can cut this time by 50%. This is a real case, and we do see that in the pilots that we're running, we do see that there is good traction in what we're testing here. Why is it so powerful having a SOC? Is because we're ingesting all the data, 4.3 billion data sets, 100,000 centers. We provide benchmarks, we provide then cases by which we can analyze the problems before they happen. But most importantly, is what we are revolutionizing now the industry is by introducing the connected engineer, by providing a bidirectional interface by which we have a SOC directing an engineer that is equipped with a proprietary lens developed together with Wipro, that is a Wi-Fi 4G lens with a torch, but as well an augmented reality lens. And the engineer is going to be looking via this lens what the SOC as well is looking, and they're transmitting each and for what? Job information on the asset history, maintenance, telemetrics about the assets. So the engineer is going to be in the front and is getting all the information back from the SOC, making sure that he can do the best of the job at the same time. Let me show you how does it work.
Connected Engineer is empowering our national network of engineers with the right information, the right technology, and the right communication mode.
Having a connected engineer remotely supported by a service operations center, our SOC, is going to be transformational. It's a real way to put data into action. We're going to have the experts remotely assisting the engineers, and they're going to be providing remotely all the support needed to the front line.
So it's all underpinned by three factors. One, we are pioneering augmented reality devices. So that means our connected engineers will be equipped with augmented reality device. They are connected real time to our SOC centers, which means they have got access to the digital data overlaying onto the real data. And they are always supported by our SOC engineers at the remote side to supporting them to fix the problem.
Having our connected engineer remotely supported by our SOC is going to be transformational. It's a real way to put data into action. Problems like first-time fix and problems like not having the right engineer with the right skills to fix a problem, they're going to disappear. The engineers are going to be remotely supported by our experts in an augmented reality fashion, giving them all the capabilities on site to fix the problems. Now, if we move to the third pillar of the digital embedded propositions, is about how we bring with full transparency and real-time information all the insights and the data of what we're doing to our clients. And this is why I would like to introduce you to Mosaic. Mosaic is, again, our proprietary MI platform that is developed on top of Microsoft Azure, and it captures all information about the properties of our clients and as well about the performance of our contracts. Have a look at it.
Welcome to Mosaic. Welcome to Mosaic, our tool for live facility management insight. With Mosaic, you're always in the know. In the know about your buildings and spaces and how they're being utilised. How they perform. And just how comfortable they really are. Mosaic keeps track of your facility's services, monitoring everything from financial and operational performance by location, site, or service. Mosaic, live facility management insight, putting you in the know.
So Mosaic is deployed now in 70 clients, and we have been providing information real time that is ingested via either the smartphones or the tablets or from the SOC, and is really producing different kind of dashboards, different kind of benchmarking insights that the clients can use to take their own decisions, and as well we can use to drive the contract. Let me show a clear example that of one of our most prestigious clients. So if this is a very real life situation where I'm the operator, for example, of the contract, and then I select the portfolio or the business unit or the service group or the property type at the top. I can scroll and see for that activity who is the accountable person that needs to execute those activities. So I can really now having a very transparent way who should do the job, and rather than calling anybody else, is all into the digital systems. Then we can see of the contracted work, let's say that we have 650,000 contracted in the month, we can see what is the work that is closed, what is the work that is in progress, what is the work that unfortunately is lost because we break the SLAs or eventually we didn't do the activity. Importantly as well to understand of that work that is still to be done, how much is statutory, how much is mandatory, how much is routine activities, so we can understand the severity or the importance of that. This is one of the most valuable features that nobody has in the industry that is called Jeopardy Management by Value. So we can now know by contract what are the activities that we need to do and complete within 0 to 7 days, 7 to 14 days, 14 to 21 days, and over 21 days. Allowing then the operator or the SOC to prioritize activities according to priority of SLA, but as well value. Then we can drill it down on georeference by location. So in this case, for example, we can explode and click one location, and we see that right Union Street is the one driving the most of the costs. And is the one that has some activities that are already, they're open within SLA and some activities that are already closed. But then the next question, and again, it's all about data, is that, okay, what are those activities? So why not to drill down into them? And then we can go into even the very much detail of the activities that are pending in a specific location with the owner and the accountable. Now, I hope you enjoyed the technology bit. Let's move to the third bit of technology services, technical service strategy. That is about expanding our capabilities into the share wallet and talking about total cost of ownership. If you think about the possibilities of FM are almost infinite. We have a continuing growing market and problems are always there, so we can solve them. The key here, and this is what Forte will address, is harnessing the data. Data at the very center of everything we do. By harnessing the data, we're going to be able to really get insightful information that we can then action into expanding our participation into developing more projects or having lifecycle management of the assets or having different kind of regime of maintenance. So it's also about developing capabilities in-house. And we have been working for the last 2 years in developing an incredible team of capabilities. So who is a Tottenham Hotspurs fan? Nobody? You are. Thank you, Pete. Condolences for Mourinho. But so we developed capability to self-deliver the entire electrical project of the Tottenham Hotspur Stadium. We did it. We designed it. We QNS it. We delivered. We're talking about lighting for 62,000 people in a very modern fashion. The other example is that on the back of our partnership with Vodafone, not only we do integrated facility maintenance and energy savings, but we are also developing very critical projects for them. And this is why, we replaced all the air conditioning chillers, which is critical infrastructure in their data centers. That has to be done not just on budget, but on time with no downtime. It's eradicating downtime. If we move to another example, for example, this is on Essex County Council, where by being their FM partner, we have a very good knowledge of their estate. And we do see the utilization. We implemented connected workspace in the main hall there. We do see the footfall. And we understand how better can they sweat the asset. How can they better commercialize their asset? So we provided them a study for commercialization of their buildings. And finally, for me, this is something that I'm very proud to say because we are creating such a good momentum in the industry and we're growing very fastly on what we believe that is the next trend that is about, Plan Zero for carbon emission sustainability and energy savings. So if you look at the top left of the slide, we have a standalone solution for energy that we rationalized from April. We have 3 go-to-market, that is buy, reduce, and comply. We either sell one of these 3 products. Then if you move up a little bit the value chain, we go into end-to-end energy management, where basically our fee is all at risk, is gain sharing. If we save money, we get paid. If we don't save money, we don't get paid. The third one is Plan Zero as a service. What does it mean? Is that we partner with the client and then we develop solutions end-to-end driven by transport, building, energy, water, and air, basically, by which we are going to help our clients to be zero emissions by their targets. And even more changing the dial to eventually being positive generators after that. Finally, the last offering is our total building review that we launched with 2 clients, by which we really take end-to-end accountability for energy, well-being, space of utilization, maintenance of assets, and capital projects. And we can prove that we can add quite a lot of value. I'm going to show you an example later. Our energy team is a strong team of 200 professionals, chartered energy engineers, chartered energy managers. We do take care of 1.3 billion a year in energy bills for our clients. And in average, we save 10% of every energy-saving contract that we get in. I am very proud to say that we're really winning some important awards. In 2018, we won the Building Energy Project of the Year. In 2019, the Innovation Project Award of the Year. And in 2020, I'm sure that we're going to win as well the shortlisted award for carbon reduction. Very important as well that we are certified and accredited by ISO 50001, which is absolutely an important landmark for us. I mentioned before about total building review, and this is where the greatest of Mitie technical service comes together. This is an example where we took a building, a 15-year-old building, that was highly maintained, and again, if you go back to the MIs that I showed you, was like on the top, like driving lots of costs, both in utility cost and repairs cost. We took care of it. Basically, we advised about how the occupation would be, about the assets that need to go in, by the maintenance routines that need to be implemented, and we could create 5.1 net benefits for our client, and 4.9 years time payback, and saving 24 gigawatts hour per year to our client. That is pretty much about, is a complete outsourcing model by which we take care end-to-end of the value chain of our client, and we come back with outcomes that are very much cash-backed and measurables. This is a new product that we're going to be launching in production in our product catalog in the second half of this year, so pretty much in the coming months after Christmas. And for the moment, we commercialize in 2 clients. We believe that this is going to be a very sticky proposition that we're going to have in the market. Now, talk is cheap, so why don't I introduce Dan Guest, that is our Business Performance Transformation Managing Director for Technical Services. I'm going to show you some of the important journeys and revolutions that we did in one of our most prestigious clients. Dan, over to you.
Thanks, Carlo.
Thank you very much.
Thank you. Okay, so to try and bring some of this to kind of reality of what we've been doing over the last 2 years. Rolls-Royce is one of our biggest, most prestigious contracts. We've had this contract for over 20 years, and obviously it's a key client for all of Mitie. We do most of our services in Rolls-Royce, integrated facilities management, workplace management, as well as project management. And we've been working with them closely to both improve their Net Promoter Score, back Mitie, we've increased our profits, and we've invested in this customer. You've heard a lot about investment over the last 12, 18 months of how we're invested in our key clients, and this is one of the great examples that's now starting to come to fruition. I'm going to take you some of the things that we've done. As you can imagine, with a contract that spans over such a long period of time, things evolve and services change, and the contract had become a little bit stagnant, and we wanted to really move that forward with our customer. So we took some time to look at what the key priorities that they have as a business, not necessarily FM priorities, but their business priorities. We start at the bottom. The basics are obviously critical. We've got to make sure that we fix things on time, minimal disruption, and we get the job done. We put their end customer, the people who occupy the buildings, right at the forefront of everything that we're doing. We minimise any disruption to production. Let's face it, they're a manufacturing business and every minute counts, so we need to make sure that we don't impact that negatively, and actually we can start to support how we can speed that up. Safety, critical to us and to Rolls-Royce, at the head of everything that we're doing. And then energy and the environment is obviously an emerging issue, something that we all need to focus on, and something that we could add great support to them. Now, how do we do this? Not the traditional route. We didn't put these figures into a contract and then get measured against them. We started to look at what are the key drivers that we could deploy together that could influence this. So if we take a look, this is at the start of Mitie's journey of changing this siloed approach, but we started at Rolls-Royce to bring together the various services under one management, one account team that could take full ownership for all services on site. We looked at how we could incentivise our staff, so the whole 1,000 people that work across that contract, how do we make it real for them so that when they approach a job, they're thinking about, could this impact production? Could this make a difference to customer service? And that's different from a cleaner to an engineer to a landscaper. And the incentives we put in place there, fully backed by our customer, moved away from a penalty-backed FM contract to a contract that says, okay, if you achieve over some particularly high standards, which I'll take you through in a minute, that we will incentivise you as Mitie, and we then pass those incentives 100% down to the staff on site. We built that up with the team, so it meant something. They could see how they could influence each of these objectives, and Alternatively, instead of having penalties, if we weren't achieving any of those objectives, then we put investment into those areas to bring us up to the right position. We conducted a benchmarking exercise across all of our team, made sure that nobody was paid living wage, and also addressed the technical expertise across the contract so that they were industry-led and industry benchmarked across the estate. And we looked at how we could drive efficiencies, things like specific to their environment. So, you know, changing a light bulb. I went out back with the field, changing a light bulb at a desk you might think will take 5 or 10 minutes. Changing a light bulb in some of these environments took 2 hours. Getting the access, making sure that we're not impacting production and how we do that. So one of the initiatives to improve performance, we put a team in at night. We put an electronic stores function in so that there was no downtime travelling away from site. Just little changes that made incremental gains to improve performance. Made us much easier to transform, and we drove that through the reporting suite that Carlo touched on, so that our FMs and our operatives could see what was about to fail, but likewise our client could see our performance, can see exactly where we're at, and the trust was built completely between both companies. So we've talked about the metrics. We had some great success. Obviously, safety, we want no accidents at all, but reportable incidents went down by 50%. Our small works, our projects activity, surveying the end customer every time we deliver one of those projects, we got satisfaction up from 85 to 100%. We moved our fix and response rate. We set a target of 98% that, if I'm honest, none of us thought we could achieve, but we wanted to set a really high bar to hit SLA despite parts, despite the age of the estate, and we got to that 98% from 75. The annual survey was the end user, so rather than the normal property engagement that we have, this was the person on site that we surveyed after every job, every month in every area, and we improved from 65 to 75%. And the byproduct of everybody focused on how they were operating was that we could take out almost £2 million worth of savings for them. Our staff feedback score went up by 24%. Our net promoter score from our client went from a negative to a plus 30, and that culminated this year in us winning the IFM Awards for operational performance. So we're already starting to get engagement with some of our other customers of how we can start to impact some of the things that Carlos mentioned earlier. As we move forward with Rolls-Royce, obviously we've already started a sensor technology project, which I'll show you a glimpse of in a moment. We're looking at other things that are key to them right now. So continue to focus on the 5 things behind. You can imagine the target's already gone up a little bit. But sustainability is at the forefront of what everybody's focused on now, and that's our priority as we move forward. We roll out ARIA, and we start to really work together on the next phase of this journey. I talked about the sensor technology and our SOC, and Carlo mentioned earlier and showed you some insights of what that looks like and how we become predictive rather than reactive. This is a great example. So this is a fan belt of a chiller unit, which could historically not have a huge impact, but in this particular site, this is a critical site that has temperature parameters. If this piece of kit goes down, it has a big impact to production. Every minute of production, every hour of production has a significant financial impact to Rolls-Royce. Traditionally, from an FM perspective, it may be a small impact financially, it's a small item. But this vibration sensor enabled us to track the performance of that belt over a period of time up until failure, or just before failure, thankfully. So you can see on here that the vibration gets worse, and the 2 weeks before failure point is where we intervened and were able to change the belt without any impact to site, out of hours, in a controlled environment. If that had moved forward 2 weeks, the belt would have failed and then we'd have been reacting. We always react well, but in this circumstance, much better not to have to impact the site. And we can share that with the manufacturing site, which obviously has really helped our customer satisfaction and engagement. The whole piece around Rolls-Royce data-focused approach that Carlo's talked about and how we're going to try and deploy this across the estate really enabled us to work with them and develop the award-winning projects around ground source heat pumps and energy reduction. Ground source heat pump in itself is not particularly innovative now, but how we deployed that, how that could work to utilise efficient energy on site for the customer was recognised as part of our award. We're moving forward now with Rolls-Royce with a total building review and how we start to develop that environment, and we can see some really good opportunities for the next phase of our relationship. Hopefully it gives you a quick insight to everything that we've deployed so far, and open to any questions.
Thank you, Dan. Questions? Yes, Bilal.
You spoke a bit about expanding into variable
Works.
More variable work. Can you give us an indication on the gross margin difference on that work versus your contracted work? Number two, do you feel that's made your business more unpredictable and cyclical, just by the nature of it? And then number three, how do you budget for that when you start the contract from an accounting perspective? Thank you.
Very good questions. Thank you, Bilal. So we do have higher margins in the variable works, and again, it's between 8 to 10%, the margins that we have there. The second question was about if it's cyclical or not, and I say yes. And when we see, like, in moments of, let's say, economic activity, we do have a good year. In moments of non-economic activity, we have a different, more challenging situation by which we're trying to overcompensate by participating in a broader share of wallet by attacking TCO and not just staying in our own segment. And point number three is that we do know historically that we have as a target internally that for every pound of fixed work, we want to do a pound of variable works. So that is something that I force in a culture in my team. So I kind of make sure that everybody goes after these additional pounds. So that is how we budget. Any other question? Yes, please.
It's Gerd Zonneveld at Canaccord Genuity. You showed a slide at the beginning showing your CAGR in terms of revenue growth and operating profit growth for the division.
Yeah.
And I think from memory, about 2% is the strategic account growth, effectively.
5.7% is strategic account.
2% was excluding international.
Correct. 2.5% is excluding international.
And how would the operating profit growth have sort of split accordingly? So what would be the operating profit growth of the strategic accounts over the same period?
It's expanding in line with revenue. So I mean, in strategic accounts, we do see as well a positive development on that. I don't have the number now as on my fingertips, but it's as well a positive expansion there. Yeah. So we have healthy ones.
Sorry, just to follow up.
Yeah, don't worry.
Given the importance of your business to the overall group target, can you perhaps talk a bit about how the management team is incentivized in your business regarding Project Forte and the margins? Thank you.
Sure. So we have two kind of incentives. So my management team is incentivized by a third of the bonus is in revenue, a third of the bonus is in cash, and a third of the bonus is in profit. That is my management team and myself. The SAMs, and the 28 of the 38 report to me, they are managed by the contra P&L. That is revenue, cash, profit, and MPS in the contra. So quarter. So Project Forte, if it doesn't deliver the 10 to 15 net, then nobody's going to get a bonus. Simple like that.
Thank you.
I think just one point there about the strategic accounts, and we're spending a lot more time on the analysis there through all the SAM reviews that we look at. I'll do that in case it doesn't pick it up on the
camera.
On the camera is that generally the strategic accounts are the biggest accounts. So margins are actually a little bit less than average, which may not be is not counterintuitive to us, but it may be to you. But obviously the cash contribution per account is much higher, and the longevity and the opportunity to extend and the upsell. That's why you're prepared to sort of bid in a bit lower to start with and then work it up. If you take Rolls-Royce as an example, I know when I arrived, the margin was about 1 or 2%, wasn't it? One of our worst contracts. You remember that one chart we showed at the very beginning in terms of money and margin? There was a big outlier on the right. That was Rolls-Royce. So we've now got it up to a reasonable level. It's not as high as we'd like it to be.
It's not as high as I would like.
But I know you're having some discussions with them, and hopefully we can keep the journey moving forward. But we've got to demonstrate delivery of it first. So generally the bigger accounts have slightly less margin. I do think it's something Paul and I have talked about, trying to show a little bit more transparency. One of our shareholders was asking the same question around the big accounts versus the rest, and to understand the dynamics of why we're focusing and where we're focusing and the cash we get back from them.
Sorry.
Oh, do you want to? Yeah, sorry. Hi, Sam from Stifel. Just a couple from me. I think you talk about potential acquisitions and areas where you can even get greater capability differentiators. You can talk about where those areas would be, that'd be great. And then Secondly, what size client is this sort of viable from a margin perspective for you? So how big does the client have to be to have
to have this
all of
this? Very good questions. So the acquisitions that I do see is primarily in the three areas. One is energy management and everything related to how do we optimize the facilities of our clients under energy or sustainability point of view. The second one, we're partnering with a company that is about all the data analytics related to FM. So if we have special skills about algorithms, data scientists, everything that is related to the technology embedment of the process into FM. The third one is hardcore, let's say, engineering services. And it could be on project capabilities, or it could be as well in reinforcing our expertise in air conditioning or in combustion. And the size. I would say that, I mean, again, there are some of these capabilities that are going to be delivered as a standard suite of offerings. So Mosaic is going to be offered to everybody. I would say that ARIA and the possibility to belong to a SOC, I think that, I mean, there must be clients of $1 million plus a year, not below. Gert, yeah, you had a question, sorry.
Thank you. Yeah, I was quite intrigued by the helmet, sort of the Robocop styles of technology-enabled helmets. I mean, presumably you're the only one in the market who. It's not live yet, is it, or is it already?
It's piloting in one client. There is another company that is willing as well to do it, but they are not being successful. It is not in our field. It's another field completely. Yeah. But it's live piloting in one client.
Yeah, because I would imagine, especially in sectors of our companies where, you know, which are highly complex contracts in terms of maintenance, or where, you know, you have to avoid sort of, you know, fixing something very quickly, very urgently is a high priority. Yeah. I guess for those companies, that must, you know, provide quite an attractive proposition.
Definitely.
When you bid for contracts. I just wondered if, you know, what your experience so far has been, you know, talking to potential customers as to whether they're willing to pay for it or whether they actually value that type.
No, it's a very good question. Thank you, Gert. So we are piloting these in one contract, and we are been very, I would say, is promising successes, but early successes. I do believe this is a standard go-to-market for critical environments. And I believe that the next generation of our workforce, on top of having a tablet, is going to have one of these augmented reality lenses as well that are going to be receiving information back. I have another client that is pretty much interested about it and is exactly spot on in what you're saying, that is dealing with critical environments. They like to have the best of Mitie at the fingertips of the engineer. So I do believe that this is going to be a change gamer in the market very soon as we have like all the data cleansed. Because again, the important thing is to be able to provide the engineer with the same data that is in the SOC, so they can have the history of the asset, the history of the jobs, and the telemetry at the same time. Talking about Forte, I would like to introduce you to the person running Forte. So it has a face, and he's Anthony Collette, former Integral and JLL. Hey, Anthony. Hello. Yes. Any other questions? I'm really pleased extending my invitation to all of you to Bracknell to see our service operation desk. And maybe, I mean, in Bracknell as well, if we have time, you can pilot the augmented reality. More than happy. Okay?
So we're on time still as well, so which is good. And Carlo, that's your fourth best language, because Spanish, Italian and Portuguese is your strongest, but it's a game changer, not a change gamer.
Okay, fine, a game changer. Yeah, okay. Thank you.
But listen, thanks for that. We're back on track there. If anyone needs a loo, it's on the left as we go in, and then we'll pick up in the plenary. Thank you. We took the decision that we were better to talk about our core businesses rather than what we call our specialist services, for a couple of reasons. A, there's a lot going on. I think you saw in the technology, investment-led technology that we're driving forward in technical services and in business services, but also because in specialist services, they do tend to be smaller businesses where they don't have the same level of materiality that we have in the core. So we haven't gone into each division within specialist services in any huge detail, but I've asked Peter Dickinson, who's our Chief of Staff and General Counsel, who heads up our M&A team as well, just to make sure everyone's clear what are the businesses, what opportunities do we have, and how do we look at the prospect going forward. And if we have time, then we can pick up a little bit of Q&A if there's anything specific about those three businesses. So over to you, Pete.
Great. Thanks very much, Phil. Well, the division comprises three businesses: Care and Custody, Mitie Waste and Mitie Landscapes. And though each business is distinctive, they all share a number of common features. They operate in niche markets, they achieve strong margins, and they have good top-line growth. And as will be apparent from the slide, the next slide, please, Anna, each of Care and Custody, Mitie Waste and Mitie Landscapes are able to achieve strong growth rates, higher margins than those achieved across the Mitie Group as a whole. I'd like to give a sort of brief overview of each of the businesses, and starting with Care and Custody. Now, Care and Custody comprises three areas of focus. The first is immigration, and as you may be aware, we operate the Heathrow Immigration Removal Centre, and we also provide detention and escorting services to the Home Office. In the field of justice, Care and Custody is now on the prisons framework, under which the Home Office will procure services for the prisons and associated infrastructure. We have yet to win any awards on that. And the last area of focus is health. And in respect of that, we provide forensic medical services for a number of police custody suites. Now, as you probably know, Mitie historically has been underrepresented in the public sector, and Care and Custody has played a very important role in creating our credibility with government. And this culminated in 2018 when Mitie qualified as supplier on phase 1 of the Crown Commercial Service FM Marketplace. And earlier this year, we secured a place on phase 2, the Workplace Services Framework. And under that framework, we're entitled to bid for defence facilities management opportunities, as well as security services and technical security contracts. Now, Care and Custody has managed to establish a very strong customer relationship, particularly with the Home Office, and that's illustrated by a very strong Net Promoter Score of 75%. And it's also built a strong brand in the market, which has relatively few credible competitors. And those competitors comprise only G4S, Geo's Group, Serco and Tascor, the latter being a Capita subsidiary. Now, frustratingly, Care and Custody was not successful on the recent prisoner and escorting and custody services tender. However, a wide range of other opportunities still remain. In the field of immigration, the Brookhouse Immigration Removal Centre, which is based at Gatwick, that is currently up for tender. At the moment, it's operated by G4S, and you may have seen a documentary which Panorama ran in September 2017. The award of that contract's expected in January of next year, and G4S have declined to participate, stating that their focus is going to be on prisons rather than immigration removal centres. Also in the field of immigration, we've been shortlisted as a potential participant in the Home Office's forthcoming procurement for new satellite tracking services. And this is to enable them to track individuals who would otherwise be kept within immigration removal centres. And it's part of the Home Office's stated new integrated approach to immigration. In the justice space, there are significant potential opportunities under the prison framework, which are likely to include the provision of facilities management services to the prison estate, but also opportunities potentially to run prisons. And for example, there are 3 PFI financed prisons currently managed by G4S, which are coming up for tender at some point next year, although we don't have details of timing. And in relation to the field of health, we've also identified a number of other opportunities to deliver what we call adjacent services to our core offering, and this might include provision of non-emergency health transport related to prisons and detention centres. Now, I'd like to move on to talk about Mitie Waste. And the first thing to highlight is that this is a business model which is unique. Unlike traditional waste companies, which have physical waste disposal infrastructure, such as incinerator capacity and refuse trucks, Mitie has no such capability. Instead, we've got a team of 70 chemists, all qualified to degree standard, whose entire focus is on eliminating or minimising the waste generated by our clients, ensuring it's disposed of in a compliant manner with the lowest environmental impact and economically. And the commercial terms of the contracts that we have with our clients are structured to reward us where we minimise their waste output. And the benefit of this approach was well illustrated in 2018 when the then national provider of clinical waste services, a company called HES, went into administration. And we were approached by Cabinet Office and the NHS to take over the provision of the services as a matter of urgency. We agreed contractual terms during extensive negotiations over a 72-hour period, and 48 hours later we mobilised the contract, clearing a substantial backlog of clinical waste around the country in short order. And we did that by leveraging the relationships we have with all of the major incinerator operators across the UK. And through that we were able to restore a robust, compliant and efficient service. Part of Mitie Way's strategy is to target those organisations who have made public commitments regarding their desire to reduce their carbon footprint within fairly aggressive timescales. And existing clients of Mitie, such as Unilever, BMW, Goldman Sachs, have all made those kind of statements. And at BMW, we've been able to establish a cadre of apprentices. Their role is to repair damaged parts which would otherwise be discarded so they can be put back into the production line and used in the construction of vehicles. I mentioned Goldman Sachs. A couple of years ago, they made a commitment that by 2020, no business waste would go to landfills. And we've been able to enable them to achieve that by 2019. And we've done that through finding homes for office furniture and other items, some of which have been sold, generating cash, which they've donated to charitable causes, and others have been gifted to organisations in the third sector. With the ever-increasing focus on sustainability, we think that Mitie Waste is very well placed to have the ability to offer a holistic approach to sustainability. And it combined both our waste offering, but also our energy and water offerings, which sit within our technical services offering. As you may have read, the recent United Nations Emissions Gap report stated that the summary findings are bleak. Countries collectively failed to stop the growth in global greenhouse gas emissions, meaning that deeper and faster cuts are now required. Now, ensuring greater sustainability is clearly the right thing for our planet, but it's also pretty good for Mitie and its business. And sustainable businesses perform significantly better in terms of engagement, and there's an estimated 1 trillion required to be spent to decarbonise the UK. Obviously giving rise to some significant opportunities for us. Now, Mitie's plan is called Plan Zero, and it is in two parts. The first is to ensure that our own business delivers a net zero carbon footprint by 2030. In addition, however, we're also looking to create a compelling commercial proposition for our clients to support them develop their own sustainability agendas. And that's going to be based on a do, lead, deliver model. At its most simplistic, Mitie will pursue 3 goals on its own account and then seek to commercialise those for the benefit of its clients. And those 3 goals are based around transport, sustainable resources and building infrastructure. And in the field of transport, we're going to build on our own electric vehicle commitments by developing a proposition for our clients where we would manage end-to-end their transition from diesel and petrol vehicles to electric vehicles. And this will give us an opportunity to combine both our fleet expertise, procurement expertise, energy and project expertise. In the field of sustainable resources, we'll be procuring zero carbon energy through power purchase agreements brokered by Mitie Energy. And we'll look to install renewable generation and power storage capabilities through Mitie projects, and also implement a zero to landfill policy through Mitie Waste. The third limb of our Plan Zero strategy relates to building infrastructure, and there we'll be focused on reducing overall energy consumption, moving away from fossil fuels in buildings, and that will require us to focus on areas like ground air source heat pumps, smart thermostats, insulation, smart glass, LED lighting, building automation, the list goes on. But bringing all of those matters together should enable us to increase our sustainability focus. Now, the last business comprised within our specialist division is landscapes. Now, the business is a leading landscape provider. It's a top 5 provider with sales of around 47 million in the last year, and it operates 12 months a year through 2 mutually dependable service lines. The first service we provide is horticultural services, comprising landscape maintenance, installation, improvement schemes, estate cleansing, interior plants and Christmas trees at this time of year. And the second element is winter services, and that comprises snow clearance, salt and gritting services. Horticultural services represent about 3/4 of the business, with winter services comprising around 25%. Now, what differentiates Mitie Landscapes from the competitors is the way in which we are able to deliver horticultural and winter services utilising the same employee and customer base. And this results in a much more efficient and flexible operation and has enabled us to drive industry-leading margins. The business achieves margins close to 20%, and that compares with industry norms of around 7%. We also self-deliver the vast majority of the services that we provide, the exception being arboricultural services, which we subcontract to specialist subcontractors. The business employs around 835 people, 690 of whom are technicians, and they're deployed all year round, and they're trained and upskilled to be able to provide both horticultural and winter services to the highest quality. We have a national network with regionally managed workforce and mobile teams who can react to the demand from our customers as required. We have a very strong blue chip client base, overseen by a best-in-class management team, and a very successful track record of contract retention and scope expansion. And the upsell of additional work and services each year accounts for around 20% of our revenue, so it's a material part of what we do. About 40% of our turnover in landscapes relates to what we call bundled or integrated FM contracts, and that's with our key clients such as Lloyds Bank, Rolls-Royce and Co-op. The balance, 60% is standalone business developed by Landscapes itself. Part of our model is to utilise the same assets both in summer and in winter, and the vehicles and equipment that we use, we've invested in specialist attachments and modifications to enable them to be deployed either cutting grass in the summer or spreading grit in the winter. Like Mitie as a whole, we try to use technology to differentiate our offering and enhance our customer experience. And contract managers are able to optimise logistical efficiency using a product called SAFE. Now, that is a work management system which enables us to schedule technicians' jobs based on their availability, their location and service specialisations, and that enables us to ensure that productivity is maximised by reducing downtime and travel between jobs. Now, in relation to winter services, we're able to offer flexible contract models, including a fixed price service or a pay-as-you-go contract to suit clients' requirements. We seek to achieve a slight bias towards fixed price contracts on the basis that that creates a natural hedge against the unpredictability of the weather and controls the bottom line impact. And in relation to gritting services, it's yet another opportunity for us to deploy technology. And we use GPS tracking devices which enable us to record exactly where our technicians go when they're gritting client sites. And this can be hugely important when there are claims brought by people who've slipped or tripped on sites and claim that they haven't been de-iced. Now, the landscape business is predominantly focused on the private sector, and it contributes around 82% of turnover. But we have a particularly strong presence in the managing agent sector, and that represents about 50% of our turnover. And blue chip clients include the likes of JLL, CBRE, and BNP Paribas Real Estate. It is worth noting that the landscape industry is going through a cycle of consolidation via M&A activity, and in particular private equity firms have been busy investing. And we've seen a number of our competitors, FM providers, dispose of their landscape operations, and you may have seen that ISS disposed of theirs about 18 months ago to Sullivan Partners, which renamed the business Tivoli. And it follows from that there are undoubtedly opportunities to grow through acquisition and sector diversification. As I hope is apparent, each of care and custody, waste and landscape each have their own role to play in contributing to the success of Mitie. Although each business operates in a very distinct sector and niche markets, they do all share a number of common features. And as I mentioned previously, strong margins and good top-line growth. Thank you.
Any questions for Pete there? I mean, as we said, they're more the sort of 50 million to 100 million revenue businesses where there is good growth. But I think strategically we've got to think about, how do we get to the scale position that we really see as the number one provider in those divisions, if indeed we choose to do that. So that's very much something part of our thinking at the moment. But any questions there for Pete on that specifically? Because we won't come back to those three divisions unless we wrap it up at the end. I don't know why I was looking at you, Keane, but...
Just a quick one. Have you had the client feedback yet on the PEX bid and basically how you scored on the assessment matrix? Thanks.
Yeah, Pete, you were there, weren't you? So
yes, I think overall the feedback was that our submission was good. However, there were a number of areas in relation to which we clearly did not perform as well as others. The way in which the tender process was structured, the costs of mobilising were included in the financial model, and our view is that that gave the incumbent a very significant advantage, as the mobilisation costs were close to 10 million. So I think from the very outset, from a financial perspective, we're slightly on the back foot. In addition, I think that the complexity of the court system and certain of the targets that we were being required to commit to in terms of delivering prisoners to docks around the country, we saw as very aggressive. And the data that we had didn't enable us to interrogate that to get a clear position of what the reality was. And again, I think the incumbent had a significant advantage in that they knew that utilisation levels were probably closer to 80% and not the 100% that we were being asked to target. And I think that certainly we've made representations to Home Office that the quality of information that they provide in bids has to be improved. The cost for us of participating in those bids is very significant. Enormous amount of time and effort goes into it, and our view is that there should be a level playing field to enable us all to put forward our very best offer.
Good answer. Okay, if we're happy to move on, then we've got just about an hour to go, so 3 lots of 20 minutes. Hope everyone's okay still. As I said at the start, we're talking about a lot of the capability we've built. So David Cooper's going to talk about change and technology. Joe's going to talk about people and talent management, and Simon's going to end on Mitie way of winning in sales. So 20 minutes, Dave.
Thanks, Phil. So I want to share a little bit about what we've been doing over the last 2.5 years, both in the technology space and what we started to do in the process space as well. And I'll first start with the technology. So I joined about 2.5 years ago, and we've radically transformed IS. There's a different team, we've standardized things, put all the things in place, and we'll say a bit more about some of these. But one of the things, for instance, is there wasn't a robust service management regime. We buy services and we should get what we actually pay for. And we put that in place, and better contract negotiations. There are a few contracts that we've negotiated in the last couple of years with Pete's help, where we've achieved savings of 50% on the contracts that we had in place that we'd inherited. So by putting this in place, you can do an awful lot better. One of the big things we've also improved is the cyber security. We've gone for upgrading all of our cyber capabilities to allow us to become a CE plus compliant company. We had to do that to get on the Crown Commercial Services Framework. It's one of the enablers, and you've heard earlier from a number of speakers that that's one of our opportunities to bid for work. But to get there, you had to go through a massive upgrade of the infrastructure here. In parallel with fixing the basics in terms of a normal IT, how it would run, we've also developed the new IoT capability, so the Internet of Things. And you heard from Carlo earlier, and Jason, just how much technology is playing a part of the company. So that capability is in place. And there are a set of products associated with this, the connected workspace products. And what the two examples I put there, Sainsbury's, for instance, use our occupancy solution. And that is in their London headquarters, and that detects who's in the building. So instead of walking around with a clicker anymore, you know, they can tell in real time, and they could see the occupancy of the buildings, and they optimize it. The other one is Rolls-Royce that Carlo spoke about, where sensors are in the buildings effectively and proactively seeing failures. And this drives all the outcomes that we want as a business. I want to give a little bit more detail about the things we've been transforming. Cloud is obviously on everybody's agenda when they talk to you about IT, and we, like everybody else, have been leveraging the cloud. And we've been taking some of our traditional systems, and SAP ERP is one of them. We moved that earlier this year, and it went from a hosted environment with DXC, the old HP if you know it, into the cloud in 6 months. And we saved 60% of the run costs on the hosting and the SAP basis in that move. Not only does it perform faster, but it actually was a lot cheaper. You can see others have gone to the cloud as well. A number of these solutions right there were actually born in the cloud, and you can see the data lake is based in Microsoft Azure, and you've got drives, all the connected workspace comes off that. Mosaic, you saw earlier with Carlo's presentation, is also driven off all of this technology. And I'll show you some of the dashboards, other dashboards besides Mosaic. And then lastly, we're using the SaaS solutions that are on the cloud. The graph on the right-hand side starts to show you the acceleration in data. We would have typically have used total storage in Mitie would have been down at this level. But as we unlock the data, as we make it available to customers, as we combine data with, other data sets, you suddenly get value that you didn't get before, and that's why you can see the storage climbing significantly. I said about upgrading our cybersecurity and going CE+ compliant. As part of that, what we also had to do was upgrade the desktops to a singles Windows 10 image. So it's the latest technology with the latest office suites. This also drives productivity in all of the businesses because they've got the latest tools. And as Paul Woolf mentioned earlier, we have done a couple of outsources. IS used to have fragmented IT teams scattered around the country because of our history, because of where we came from. And generally, the skills weren't focused always where we needed them to be, especially in the new technology. And so last year, just over 1 year ago, we completed the move of the applications maintenance to Wipro, who are now our strategic partner. And in that move, we went from being able to support this business from 8 a.m. till 5 p.m. to 7/24. Also, though, saving 45% on the labour costs. So it's a huge upside for Mitie. And you can see on the right-hand side as well, the first-time fix rates. It's gone up significantly by using Wipro. This year, we've then followed it with the applications development. We have a much reduced in-house IT team with a fixed capability. So if we don't want any development, we don't pay anything. If we do, it's a pay-per-use model that we're using. What we're also trying to do is rationalize the applications, and we need to reduce the number of applications, and we've been doing that. I'll say a little bit about that. And leverage what we've already bought. We've bought some really good applications. We haven't used them in the right way, and that theme will come back again and again. And we're introducing new technology where we want to transform things like the customer experience, like democratizing the data, opening it up, and the integration space as well. So we had a Salesforce application. Well, actually, we had eight instances previously, and that got crushed down to one. You can imagine just being able to say what the pipeline of work was really quite difficult with 8 separate applications. So we've standardized on that. We've introduced O365, the mobility security. Click, Carlo talked about, that's a new addition. This allows you the scheduling. We had a core SAP system, but we also had many other ERP systems, and we've actually rationalized. We've removed 3 already, and we're working on Oracle. Carlo spoke about that as well. And then we've added SuccessFactors, Concur, Smart Recruiters. We're adding capability where we don't have it, but where we do have it, make it work for the whole business. Another set of capabilities that put on the right-hand side, these are the ones I'm going to talk a little bit more about API management, data lake, Power BI. These are new. We never had these, never had any capability in these spaces. So the first one I want to talk about is the artificial intelligence chatbot. Customers generally prefer to self-serve these days. Nobody likes phoning a call center and being queued and all that comes with that. So for our clients, and it's rolling out as part of the solution and it's fronted through the technical services under Carlo. So this is the Lloyds Bank chatbot, and it's live. It's been live for quite a while. It does 97% of all of the services. It's been optimized to do that. And what you can see here, the bot, so Jag is logged in, then it's got a unique chat reference you can see at the top, so we can see everything that's been said. And it knows where he's based normally, and it's asking him questions. What it's trying to do in the minimum number of questions is to A, understand the problem, but B, understand the priority of this, and C, dispatch the people. So it knows he's normally in Gresham Street. It's asking him, is he in Gresham Street? And it's checking things with him. So are there any other details? And it'll do the same for whether it's lights out or, lights out on a stairwell. And you can see what it's now doing, it's logged one job. It's logged a job. But because he answered the question saying the roof was leaking and the water's going into the electrics, it's now logging a second job. And what it does, what you get is a consistent outcome. So this is live with Lloyds and takes jobs every day. Now, it's also live with a number of other customers. Starbucks was a recent acquisition in the technical services space with Carlo's clients. And they came to Bracknell to see the technology. And when they saw this, they were blown away. They was like, within half an hour of leaving, they phoned Carlo back up, we want to join. Because they operate their business on Facebook for Business, and that's how they log things. Well, you can't phone a call center off Facebook for Business. What they've asked for is connect this up. So it's now live with Starbucks and being driven off that. So, technology makes a difference. When you show the customers this, it makes a huge difference. Real-time dashboards. You saw Mosaic earlier, and this is one for the waste business. And you'll see JLL at the top. They were an existing client, but we've won a significant amount more business from JLL. They had about 30 suppliers, and they were all sending PowerPoint or spreadsheets in at the end of the month. And that's no way to manage, is it? What we deploy, every 20 minutes, we take the data out of the operational system, we put it into the data lake, and we surface it. And you can see here, there's a problem. You can see the problem. 20 minutes later, you can see the problem. You can see there's a problem in one of the buildings. You can click on the building. So our waste business. And Peter spoke earlier about the clinical waste scandal. With this technology deployed, that clinical waste scandal would never have happened. You would have seen that it hadn't gone to incineration. You would have seen it piling up at various stages along the way. We deployed the same technology into healthcare. And again, this has been deployed into a number of hospitals, and again, all uses the same technology. And you'll see that it's been deployed, the list of hospitals, St George's, St Helier, West Herts, Royal Cornwall, Epsom, a number of hospitals, this technology. It came about in the hospitals because they used to get a monthly report, and they said, why does this monthly report not feel like the service I've actually been getting? And that's where we started. And now, so first of all, we turn this technology on. You can see all the jobs down on the right hand at the bottom, whether there's portering there, cleaning, portering, and catering, it says. So you can drill on them, you can click into them. And exactly as Carlo showed you, and it's going to show here, you can see the row levels. You can just click on it. You can see that the porter should have taken this oxygen cylinder to there. This is all real time. This is all powered off Microsoft Azure in real time. And the clients, when they get this, are blown away by the technology. Again, it's just transformational for these. Imagine how it transforms the customer experience. So instead of saying, didn't feel like everything was green this month, you can see everything's green or everything's red. And it helps drive our own efficiency. Open APIs. One of the things we're trying to do is unlock our systems, allow our customers to see data, allow our customers to interact with us, send us jobs. That's how Mitie used to be connected on the bottom left-hand corner. The integration was all point-to-point and often using spreadsheets and email. What we're trying to do, and what we are doing, is using Microsoft's cloud-based API management solution. And that, you build it once, and then anybody connect to it. It's exactly the same way you connect to any of Facebook or Twitter or LinkedIn, or you build it once, you just connect. Here's the standard interface. Say a little bit about the transformation that I'm driving at the moment, that Phil has asked me to lead on. And you've heard about Forte, and you've heard about, there's a number of major programs here on the right hand side, but there's a Quality Improvement Council that I am driving. What does the Quality Improvement Council do? What's it focused on? We have, in the past, deployed lots of systems and processes and data, and they just missed the mark that bit. Partly because we were different companies. We had so many different companies. Everybody said, that process won't work for me. I need a slightly different one, and I need a different one, and I need a different one. And so we've got lots and lots of different processes, we have lots of failures and exceptions in the system, and that drives lots of people to solve this. And what the aim of this is about going back and looking. We put that in, it hasn't driven the benefits it should have done. The automation isn't at the levels it should have been. But it's also about embedding quality in the whole of the Mitie business. This is about driving these efficiency improvements, the engagement, the enlightenment, the empowerment. This is an education exercise as well. You know, there's the problem of give a man a fish and you'll feed him for a day. We're teaching people how to fish in Mitie, how to embed quality in everything that we do, such that we win a new contract and it's slightly different. We don't stick it on as a sticking plaster over the top. We make sure it's integrated, make sure it works, make sure it drives. So what we're doing is reviewing all the end-to-end processes and minimizing the number of exceptions, significantly driving the efficiency. Just to give you some feel for the scale of the opportunity, we did an outsource to Genpact the other year of our Mitie processes. We already have things in flight that will drive a 30% reduction in the Genpact headcount, and we'll probably get in excess of 50% reduction. That tells you the scale of the opportunity that we have as a business. So what does the future look like? We are driving increases in the levels of automation in our finance processes. Again, as I said to you before, some of this is based in the history. We did things differently in every business. And so we're driving this together. The levels of automation. We're seeking, for instance, in our P2P process, we're seeking to get to 95, 98% automation. We're nowhere near that. It's rising. Some businesses are on their way up and are at 70, 75%. Others are still below. But we're fixing all of these. We're currently working on the payroll processes as well, because, again, for history reasons, they were all different. We streamlined those. The HR. We have one of our major contracts coming to an end next year, with the private cloud hosting. We're going to be moving that to the public cloud because, again, we'll make significant savings. We want to leverage all the technology we can in the cloud. So much is coming so fast. One of the ones we're going to use this year is Amazon Connect. That's how they do their telephony. We'll take our telephony out and we'll plumb Amazon Connect in. RPA, we now have RPA live in a few instances. We'll use that where that drives value for us as a business. And last but not least is, in some of our businesses, the hourly paid, for instance, cleaners, we are deploying solutions, the one called In Touch, which turns this around. It makes it more like a gig economy, where they can actually see what additional shifts there are and they can bid for work and turn the problem around. Instead of this, you had to phone your manager. You know, you walk in the building, your phone knows you walked in, it's clocked you in, there's an additional shift at the end of this one if you want it. Turning this model around and actually will drive significant upside. So there's massive opportunities we go forward from technology and the process change.
Okay, so with David, there's so much going on in the business that you could go on all day, I know. But any questions specific for David in terms of what you've heard there? There's a lot going on. You saw the external facing of technology, but David's really focused on the internal plumbing now. Anything specifically that caught anyone's eyes or questions? If not, we'll move on. We can wrap up some of those savings in the guidance that we've got at the end of the year. So Simon, so it's you're next. Sorry, I got it the wrong way around. Apologies.
That's okay.
So Simon Venn runs all our government strategic relationships with the government, but also is responsible for our strategic account management and our group sales function. So over to you, Simon.
Thanks, Phil. So I'm going to talk to you about how we've transformed our sales capability over the last 2 years. And just for a bit of context, prior to Mitie, I worked for very large global organisations like Royal Dutch Shell, Cable and Wireless. And we're bringing some of the world-class capabilities that I experienced there to bear in Mitie. We're building a true world-class sales capability and marketing capability. See if I can get this to switch to the next slide. So we've transformed our sales in 4 specific areas or blocks. First of all, with regard to sales capability and pipeline, where we have ensured that we've increased the capability of our commercial teams. We've ensured that they have access to really high quality data, really high quality collateral, with a view to really transforming the total capability of our commercial teams. We've also transformed the way we manage our strategic accounts. And we've transformed the relationship that we have with government from one that was very tactical, piecemeal, to one that is truly strategic. And finally, the thing that underpins all of that is our marketing capability. Several of you in the room have been on this journey with us. 2 years ago, we started the process, and time flies when you're having fun, I can assure you. But we've simplified the business immensely. We've taken it from being incredibly fragmented, incredibly siloed, and we've really, really turned it into a mature organisation. We've also introduced robust layers of governance. So to ensure that our bids are well considered, competitive, and of a high quality, there is nothing over £3 million that isn't scrutinised by our executive through 4 specific stages. So from right at the beginning, whether it's a bid, no bid, right the way through RFI, RFP, best and final offer, to the final stage, which is whether we win or lose something, we still review it and we make sure we take those lessons learned and we feed them back into the process to ensure that our bids are of a higher quality every single time. As you know, we've implemented MPS. And this is all about that continuous feedback to action loop. And it's really, really pertinent when we start talking about our strategic accounts, which deliver 60% of our revenue, which is also why we've introduced a comprehensive strategic account management program, which you've heard Phil, Paul, and others refer to as our SAM program. Now, finally, unlike myself, I hasten to add, we were very much underweight in government. And we've addressed this robustly to ensure we increase our market share and balance our portfolio accordingly. So what is the impact of all of these things? We've built real momentum. We have more opportunity, and we are definitely beginning to win more. Having simplified our business, we've created a tower of capability, and this is all about binding the businesses we have together as one Mitie. This has robust governance, shared processes and tools, quality MI that enable us to manage our business in a consistent, efficient, and competitive manner. This is all about minimizing costs and maximizing quality, and it's already paying dividends with a sharp increase in win rates, margin, and cross-selling activity. Making sure that our largest accounts are managed in a consistent and professional manner is absolutely key. Our SAMs must be empowered to make the right decisions in the best interests of both the customer and Mitie. So we've created a common platform with quality MI, accurate financial information, robust supply chain management, and clearly defined decision rights to ensure that our SAMs are equipped to genuinely deliver the exceptional every day for our customers. And I often like to try and put myself in our customers' shoes. And if they're standing there and saying, look, I want more, I want to know the guy that's dealing with me on a daily basis and managing my account is empowered to make right decisions, I think they've got every right to ask that of us. And I think that's the challenge that we have to answer and make sure that we fulfill. A key component of One Mitie is the Mitie Way, a clearly defined set of world-class processes to ensure we do things the right way, the same way, every single time. And whether that's how we sell, mobilize, or manage our accounts, we do it in a consistent, professional manner, rather than constantly reinventing the wheel. Combined, these changes are delivering clear dividends, with solid pipeline growth, strong retention and win rates, and a positive shift in NPS from -27 to +12 today. And taken together, these are really strong indicators that we're doing the right things and we're really making solid progress against our strategy. And finally, our top 40 strategic accounts deliver 60% of our revenue. If we can shift those accounts, we can make a real material impact in the short term to this company. That is why we've implemented our strategic account management program to ensure that our SAMs are both empowered, equipped, and most importantly, incentivized to manage their accounts. Previously, they were aligned to the BU to which they reported, and their incentives were aligned to the performance of that BU. We've changed that. So each and every single one of our SAMs is now 100% aligned and accountable and incentivized against the performance of the account. I think Phil and David was using a fishing term earlier. Phil often refers to the fact that you need to fish where the fish are. That's what this is all about. And the really exciting thing here is that we have already started to deliver more. We are already reducing costs and we are increasing growth. And we're doing that all whilst maintaining and increasing our customer satisfaction. And the SAMs are absolutely pivotal to that aim. The efficacy of our account management is largely driven by the properly aligned incentives and talent development, particularly with regard to leadership roles. And we know that we can increase the value of these accounts by 10%. We know that's well within our grasp. Like any transformation or change program, creating the structures, the tools, the systems, that's the easy part. It takes much longer to change a culture. But we started this 2 years ago. We're a long way along that road, and we've already started to create a real high-performance culture. With robust talent management, learning and development resources already in place, and we've recently put every single one of our SAMs through a rigorous psychometric and competency-based assessment. I personally sat in more than 50% of those and eyeballed the individuals concerned. They are massively, massively motivated by the opportunity that they now have, by the fact that we are investing in them as a community. We're going to unlock their true potential, and we're empowering them to actually make a real difference to the customers that they genuinely care about and are passionate about. Each SAM also now has a tailored performance development plan with access to world-class online learning and development tools, which were developed by the Ashridge Business School. This all translates into better customer retention, better customer cross-selling and upselling, better customer relationships, and ultimately better business. Importantly, these changes are driving growth in our pipeline. If you normalize this pipeline by removing the elements associated with our disposals of gather and gather, pest, and social housing, we've grown our pipeline by 80%. That's in spite of all of the wider economic headwinds and the UK market. As you can see, a key driver of that growth has been public sector, which accounts for nearly £3.5 billion of the pipeline. We're already starting to convert some of those public sector opportunities into real new business. So HMRC, Bank of England, the NHS we were just talking about 10 minutes ago, none of those would have been possible to win unless we were on Crown Commercial Services frameworks that we secured 18 months ago. Balancing our portfolio by increasing our share of market in government spend was a very deliberate choice that we made 2 years ago. We've done that by being fully transparent, by inviting scrutiny from government. We, every single year, go through an extremely thorough annual review process. And we work in true partnership with government to address industry-wide shortfalls as well. So we were actively involved in the development of the outsourcing playbook. And we're playing our part in raising the bar. We're no longer bidding on every single contract. We won't bid at low, unsustainable prices. We are not going to pursue minimum wage opportunities. We are going to do the right thing because we believe that's how we will lead the industry. In a post-Carillion world, the government needs robust, stable suppliers, and we've worked really hard to position ourselves. And I'm proud of this because we are now one of a very small handful of government strategic partners. And that's something that really positions us strongly going into the next 18 months. And this has been rewarded with our successful inclusion on every single framework that we have bid for. And if you look at the sort of FM framework, RM3830 on the slide, that was the first framework we secured. Every opportunity that we have discussed today, whether it was Bank of England, whether it was HMRC, it has been because of that framework and because we are on it. If we weren't on the frameworks, we couldn't secure the business. And if you look at defence as an opportunity, it's absolutely enormous for us. And the interesting thing about defence is that typically if you're not an incumbent, if you don't have legacy experience, you're at a distinct disadvantage. But the end customer from a defence perspective is so fed up with the state of their facilities, they are so fed up with the services that they have been provided with over the last 10 years that they are crying out for new blood, they are crying out for new entrants, and we're the only new entrant on that framework. And it's mandatory now for every central government department to procure contracts through those commercial services frameworks. So we know our competitors, we know how we can differentiate ourselves against them, and we know how we can win. This is all underpinned by a world-class marketing capability. We don't have deep pockets. So we have to be really clear about our marketing objectives, about the target markets we choose to operate in. We've put digital at the heart of absolutely everything we do, and we've made sure that the content is both relevant and inspirational. And you'll see things here even, I mean, proud sponsors of the British Army. That's something, again, that we're hugely proud of. We've built that defence capability from ground up, and we've got some of the UK's leading thinkers and experts in that area. So we're really proud to be involved with campaigns like that. And campaigns are something that we are basing all of our marketing around. And we have an absolute, we've got Chris Copeland, our CMO, at the back there, but we have a world-class marketing capability. And it was only last week, I think, that a global B2B marketing business awards, we outperformed Volkswagen, we outperformed Cisco with much bigger budgets, and we won a gold award for our Connected Workspace campaign. So a bit like, and I know you're a boxer, Derek, a bit like Anthony Joshua, we are absolutely capable of punching well above our weight when it counts. And I'm really proud of that team and what they've achieved. So just to recap, we know what great looks like. We've transformed our sales and our strategic account management capability. And we've built strong, enduring relationships with government and increased our pipeline of opportunity, which we're now beginning to convert. When I step back and I consider that in the round, I believe that we are really strongly positioned. And I believe that our sales and marketing capability will be the true growth engine for the business over the coming years. Thank you very much.
Okay, well, thank you, Simon, for that. I think we'll pick up Q&As at the end. We're running a little bit late, so thank you for that, and then we'll wrap up at the end. Over to Joe. Sorry, Joe Davis, our HRD, who again has been very busy with everything.
Thank you. I might look okay up here, but actually deep down inside, I'm hungry. I don't know about you, and I'm conscious I stand between you and lunch, so I promise I will get on with my slides. So, as you all know, our biggest asset is our people, and therefore we have, it's absolutely vital that we have our human resources firstly engaged, secondly, mobilised at exactly the right time to exactly the right place, and thirdly, with the correct skills and experience and qualifications for the job in hand, to ensure both productivity and delivering great service. My last 2 years at Mitie have been ensuring that we lay technological people solutions which enable both flexibility and choice. With 5 generations in the workplace today, there can be no more one size fits all. And so the choice and flexibility must underpin everything that we do and every step of our people proposition, from where and how people work, to where and what they learn, to how they choose to take their rewards and incentives. The People Hub provides our core HR operating system to ensure that our people data is correct and can provide meaningful management information. In addition, self-service functionality will, over time, reduce the central HR administration support required. The Learning Hub has provided a central catalogue of digital learning solutions, providing the much-needed shift from expensive classroom-based learning to cost-effective online immersive content. Content can now be curated for specific roles, ensuring that mandatory training is completed and logged and technical updates pushed out to critical audiences. And the final technology is where our greatest cost saving comes. With 20,000 hires a year and no system or dedicated team supporting the hiring process, mistakes were costly. We paid the price of a poor candidate experience through new joiner turnover and a poor employer brand perception, not to mention astronomical rates from unscrupulous recruitment agencies. This has all changed through the introduction of a talent hub. It's opened up internal opportunities to support career development, long-term career development, and we can create strong digital campaigns using sophisticated digital job boards and can measure our speed to hire, not to mention control our supplier spend much better, to the tune of £6 million over 3 years. Whilst our HR technology programme can best be described as a revolution, there's been a more subtle evolution in our culture. Culture change takes time and requires continual feeding and nurturing, so our approach has been to reinforce our new values and the desired behaviours through a continual omni-channel campaign, which reaches the front line and allows for the challenges of meeting the preferences of 5 generations in the workplace. In employee engagement, often it's the simplest things that make the biggest difference. Storytelling can help to bring these new behaviours to life. A new company magazine, both paper and digital, has hit the spot. A monthly team talk in a box, the download, is circulated for every manager to download to their teams once a month. And a celebration hub is where every tool available to say thank you and recognise great performance and effort and service are housed. 6 new diversity networks and a relentless campaign focused on actions from our annual employee engagement survey, the Upload survey, has bagged us some great external recognition from top employers, from the inclusive UK employers, where we're number 6, and also from Britain's most admired companies just this week. And finally also ROSPA. In 2 years, we've seen a seismic shift in employee engagement, but I'll come on to expand further on our successes in a moment. Our ESG credentials have never been more important. Our people, our customers, and our planet itself demands us to do the right thing, but also our clients need our help with their sustainability plans. 20% of the scoring framework on government bids is now devoted to social value questions. Luckily, we do lots, but we haven't coordinated our efforts across the group or shouted about them loudly enough or through the right channels. Over the last 12 months, we've created a social value framework based on the United Nations Sustainability Development Goals, through which we organise our efforts. We've articulated our mission and our commitments, our 5 key work streams: employment, responsibility, community, environment, and innovation. We've repurposed our Mitie Foundation to lead on 3 of these and selected our 5 charity partners through which we'll enter into long-term partnerships starting in the new calendar year. We've also announced an additional day off for all staff to undertake a day's volunteering, supported through a new digital portal which will allow our people to select a volunteering activity from a list of curated opportunities. The portal will allow us to capture the time our people spend volunteering and roll that up into real-time social value dashboard, which will appear as a dedicated subpage on our main website. We have an active programme against each of the 5 blocks, such as our Ready to Work programme for those who experience significant barriers to employment, and our work with SME partners, our sponsorship of Army Rugby, and some fascinating innovation in the use of chemical-free cleaning products through the infusion of ozone into tap water and the use of special surface coatings to remove the requirement to clean as frequently. You can read about these in our social value report, a copy of which is available to you at the end of the presentation. But I thought I'd use this opportunity to pull out some of the key achievements, specifically in the environmental block. Our Plan Zero commitments, which Peter mentioned earlier, to be net carbon neutral by 2030 are well underway. We've saved 3,700 tonnes of carbon over the last 2 years, as verified by the Carbon Trust, who awarded us a score of 81% against the Carbon Trust standard, which is the highest in our sector. We are one of only 50 companies globally to have joined the EV100 programme. We have more than 700 electric vehicles on order, and we've taken delivery on our first 100 vehicles. And by the end of next year, 20% of our entire fleet will be entirely electric. Our clients' energy requirements are 3,000 times larger than our own, totalling an eye-watering 10 terawatts hours. We procure this energy for ourselves and our energy clients from renewable energy sources. And we've developed a suite of e-learning modules, both internally and externally facing, to create our own eco-warriors. These are our social value champions, as we call them within our own business. And our externally facing e-learning suite focuses on energy, waste and water for our clients to consider their sustainability credentials and understand how they can help themselves to do business in a more sustainable way. We're beginning to use our impressive baselines to build our commercial sustainability proposition to help our clients achieve their targets too. For example, we've saved one of our biggest clients, a high street bank, £49 million in energy savings. With 8 different business units 2 years ago came 8 different ways of doing everything. And as I said previously, any change takes time, but a relentless reinforcement of new, more professional ways of working has been high on the agenda of both my team, reinforced by the leadership teams across the business. New technology and recruitment processes have professionalised how we recruit. A single onboarding programme housed in our learning hub ensures that all new hires have a faster speed to competence and the same knowledge pre-day one. Our licence to operate induction has provided new starters with the right information and skills to hit the ground running. And our licence to lead programme provides 3 levels of leadership, starting with a suite of e-learning modules to become a bronze level leader, working up to a level 7 apprenticeship programme, which awards a platinum standard of leadership competence. This has enabled us to build much stronger leadership capability across our business. Spotting talent in a consistent way has also been a key programme.
articulating what talent is at Mitie, how you spot it and what you do with it once you've spotted it, ensures that we develop those with high potential to really achieve their potential. And finally, when people leave us, to make sure that they really do leave us and that the costs don't walk out the door with them. These consistent, bite-sized people solutions are captured in the Mitie way of developing talent, as Simon referenced earlier. It's the people playbook from the Mitie way suite. So that all sounds rather nice, but is it working? And as I said at the beginning of my section, culture change takes time, effort, and requires the ability to tell compelling stories. Whilst pictures and stories work for some, numbers work for others, and I think they're beginning to speak for themselves. We have a better qualified and significantly more engaged workforce. We have less turnover. We have more incentives, better recognition, fairer pay and reward decisions, and a safer working environment. A different HR model will now take on the future people journey at Mitie, and I think the foundations are now firm enough. The process is professionalised sufficiently for our leadership teams to pick up the reins from here, and I realise some of those returns on the investments that we've made. Thank you. Have we lost Phil?
Okay, sorry, Joe. I thought we might go on to the next one, but no, thank you for that. What we might do then is go straight into my wrap-up, if that's okay, and then we'll have questions at the end. Thanks for that, Joe, as well. Sorry, it was not quite coordinated, that one, but never mind. Well, thank you, firstly, everybody, for listening today and sitting so patiently. I mean, it's been really good to get everybody in here today. I'm really grateful for all your support. And hopefully it's been useful as well. At least you've seen where the 45 million quid of Helix has gone. But I think it's been well spent. I think you are clear that no part of Mitie has been left untouched by the changes and the transformation that we've been operating under. I'll just start with just a few thank yous first, because people have worked very hard, and I just want to thank Anna Gavrilova for all the hard work. You've done 170 slides. You were there till midnight and later last night. Big thank you to you. David Wiggin at the back, who's Mr. Fix-It, who makes sure that everything works well, and Peter Woodsford, who set up all the streaming for this when everyone said it couldn't be done, and I was just watching it back there, and it's terrific. I mean, the quality is, everyone says the quality is better than when UBS did it, so who knows about that one. Jason, James, Christian, Kevin did a great job for the team. Thank you there. And then Carlo and Dan, very slick as well. Get a sense of what's really going on in the team. Big thank you, Peter. I know you're not used to talking about culture, but makes a change from M&A. So thank you for that. David Cooper, thank you for sticking to the allotted time. There's a lot to get through there. And Simon and Joe as well. And the final one on the thank yous is Paul Woolf, who's going to join me at the end on any Q's and A's, who's hiding at the back. But as you know, Paul is leaving us shortly. And our new, improved, or at least not taller, finance director, Andrew Peeler. If you just stand up, Andrew, get people to know who Andrew is, who started yesterday. So it's a bit of a baptism of fire and a little bit unfair of us to ask you to answer all the difficult questions. But so those are my thank yous out of the way, if you just roll on the slide. So I said, the first thing this morning, a good outcome would be if we could leave you with some key messages, and hopefully we've done that. We have built strong foundations, and I hope you've seen some of that. The technology is delivering for us. A number of questions about our clients paying for it, but it pays for it in its different ways. It pays for it in a win like a GSK, for example, which came from a cold call from the marketing campaign on the back of the connected workspace over 18 months ago. Technology is working for us internally as well, and we've still got some ways to go. Hopefully you saw with Carlo a key message that Forte, along with hollowing out our group costs and backed by RPA, we can still generate significant cost savings. And unlike the last time out of Helix, where we had to reinvest those back into the business. Clearly, we don't believe we're going to have to going forward in the next stage of our development. Hopefully, we left you with a sense that we are building great momentum in sales. It hasn't fully converted yet, but with the pipeline that we've got, we are confident about our ability to deliver there, as we are in change and momentum there, and as we are in talent as well. And I think if you were to, there are people working here today, so it's just a bit like a library out there at the moment, but there's some very talented people who have joined us from a variety of FM companies who all seem to be settling in very well and are contributing to the momentum that we're building. Hopefully we leave you with the thought that our financial guidance that we gave not very long ago is pretty robust for this year and next, and that we are certainly, hopefully you take away that we are confident about our ability to move to significant value generation for our shareholders. And I think if you look at the business 3 years ago versus today, we are a very different company today. And whilst the numbers, the profit and the revenue, and I know everybody wants to sort of fill in their spreadsheets, it can be sometimes a bit slow to come through, and it's always my continued frustration. But if you look at the business this management team inherited 3 years ago and compare it to today, there's no doubt that the leading indicators show that we are managing a much better run business with improving financial strength, much better customer service, rising employee engagement, and as I said, a material pipeline. We feel confident we will convert to growth. And for me, business is all about momentum, and we do feel now that we have got that in Mitie. We've built capability, we are building momentum. So those are the foundations we built in phase one, but as the coloured pies show, we're not at our full potential today. And in the next 3 years, therefore, we'll see us accelerate from these foundations into our accelerated value creation. One of faster growth, one of better margins, continued NPS, employee engagement improvement, breakthrough wins from the CCS framework. These are absolutely, we're confident will come through, and they are hugely material in a way that some of our other contracts simply don't move the dial in the same way, and they are upside to our current guidance. Further leverage reduction, as Paul touched on, and for the first time, proper free cash flow generation. When we've paid out the dividends, we've paid out interest and tax, free cash flow generation. And I would say judge us on this, if nothing else, over the next couple of years. And as Pete touched on as well, there will be some further portfolio simplification as we go forward. So that's the agenda for accelerated value creation. And I guess we could stop there and say, well, that's it, we'll be happy at that point, and we absolutely will be. But is there a longer term aspiration for us? A vision of a company we'd like Mitie to be one day that really leverages the capabilities that hopefully we've demonstrated we've been building today over a larger footprint. And for us, the answer is yes. I hope you can see we've got a real management strength, we've got some real capability and some systems that are capable of running a bigger organization with little incremental costs and support needed to manage that extra scale. So in the future, we do see consolidation in the industry. I think there's no doubt about that. And we'd like to see, and we'd like to believe that Mitie could indeed be one of the winners in that consolidating market. The flywheel for business is growth, and adding double-digit gross contract margins to a strong capability base and tightly controlled cost base is how we'd expect to see that margin accretion continuing after phase two. We see a technically advanced company, one that hopefully you get a sense of today, where technology is driving a lot of our thinking, with market leadership positions, higher margins, stickier customers, and greater scale. and backed by some infill M&A, as both Carlo and Jason touched on in our core. And that's what we call 1, 2, 3. It's an aspiration at the moment. Number one, market leadership in our chosen divisions, an EBITDA approaching 200 million and a revenue approaching 3 billion. Yes, it is an aspiration, but we believe we've got a management team that is capable of running a company that looks like 1, 2, 3. And as I said at the start this morning, we're trying to look further on the road ahead and not just into next quarter's numbers. And if you were able to do that, you will see, and hopefully you've seen it today, a management team that's ambitious and capable of making Mitie a great company and a company getting closer to 1, 2, 3. So thank you for listening today. I think we'll have a final wrap up on Q&As, and then I believe there's some lunch out there, and we're on time, which is remarkable. So, Paul, if you'd like to join me for our last duet, in case there are any questions or thoughts or anything that anybody's got, or anything that anyone's seen today that's caught their eye. Any, Joe?
Thank you. Joe Brent at Libram. 2 questions, if I may. Firstly, could you just define what you mean by free cash flow? I think you mentioned after dividends, the 20 to 30 million. Could you just clarify exactly what you mean?
So it's after tax, after interest, after dividends. So it's absolutely free. You're going to look at me now and you say it's before dividends, are you? Before dividends, okay. Before dividends of 14 million, which is our number we normally show. Thank you.
So it's before dividends and before any further M&A in or out.
Thank you.
Thank you. I'm glad you're here.
Okay.
We'll miss you.
The second question, if I may, just on M&A, could you give us some indication of the sort of businesses you might look to buy, and maybe some indication of the businesses you might think about selling?
Yeah, I've got the scars on my back from saying we were going to dispose of social housing very early on when I arrived, and then mysteriously the business started to underperform, and we found, as you know and as you've seen in the numbers, quite a lot of historical claims coming out of the woodwork, which we had to deal with. So we're not going to say what's in and what's out, but what we will say is this: and both Jason and Carlo touched on it this morning. We do feel that we can add some core capabilities, niche capabilities in our core. And our core, as you heard today, is our business services. We've got some potential opportunities around fire and security, and in technical services, as Carlo mentioned. We've looked at a couple of small plays in energy and in project and aircons particularly. So these are small, fives of, not tens of, if you follow that one. And I think if you look at what the success we've had with VSG, net after the working capital adjustment was about £10 million. They're the sort of deals that we like to be able to sort of digest and not have to add any more internal capability to support managing the extra portfolio contracts that we've got. And that's part of the flywheel as well that we've talked about. Yeah, we've got one here.
Talked quite a lot about net promoter scores. Do you have any sense of what that looks like across the industry, and whether that sort of 30 plus of the aspirational target is something that others are maybe?
Yeah, I mean, some of our one competitor of ours does produce an NPS score, which is a global account. It's interesting. When you dig deeper into the NPS score, and originally our NPS scores, we'd ask the procurement department or the property department, and then you actually ask the users of your Lloyds Banks and your Skies and your Rolls Royce, and what's the experience, and we're seeing a much higher scoring for the richer user experience than just asking property departments, as it were. We've no problem with asking them. They're our important client, but trying to get a richer picture. So there are other NPS scores out there. I think if you get up to 40 plus, you're doing pretty well in a B2B industry, and certainly that's what we aspire to be. So we have some way to go. Carlo, you're up at 30 odd now. So, and as well, the other thing we touched on before, and we will start to pull out a little bit more insight into our key strategic accounts, because we got a question this morning about margins in there and growth in there, is that the NPS score, which we've told you before, is higher on average in the SAM accounts, which is a good sign. It's what we'd hope for. Keen, well, maybe James behind, then Keen after. Sorry.
Wanted to ask, morning, James Beard from Numis. Wanted to ask about staff churn. Your slides there alluded to reducing staff churn over the last couple of years. What's the sort of current level of staff churn? How does that vary across the different service lines?
So the overall churn is still high. If you think that we employ 20,000 cleaners, and that would be the highest, and it's starting to come down. But on average, when you think it's 20,000 out of 50, our churn overall would be about 20%. Joe, is that about right? 18.9%. 18.9. Okay, so it's come down a bit. But what we've got to do is try and pick the key skill set. So Carlo showed his churn in technicians has fallen from 24% to 12%, and I think Jason, yours in the security, certainly the higher end of the technology is probably single-digit churn now. But it's the law of averages with cleaning, and I think James, that's certainly something that I know you're working on. The way to fix it is always it's about engagement, it's about pay, and I know Joe, I think you touched on it, or Peter touched on it, about foundation living wage, or national living wage, which is the minimum wage, and we're bidding now on foundation living wage, and that's a way of keeping our people happier as well. And then I'll add into that the apprenticeships, where we want to ensure that our line managers have better training to manage and that our frontline are better inducted, because actually within our churn number, you'll find there's people who stay and have always been with the company for 5 years or so plus, and then there's people churning and spinning the wheels after 3 to 6 months, and they're the people we've got to do a better job at inducting and keeping on board. Long answer. Keen.
Thanks. Just coming back again on the 20 to 30 million run rate for free cash flow. That would imply a free cash flow conversion rate considerably less than 50%, which just feels way too low for your business. So are we likely to see elevated CapEx over the next 2 or 3 years, and that's how we bridge between the two? Is it the working capital line? Is it cash pensions, cash restructuring, or are you just being very conservative?
Yeah, go on.
So several things. So first of all, CapEx is, and we mentioned this at the half-year results, so CapEx is a bit more elevated for the next 2 years, and it's primarily this Project Forte programme, of which somewhere over half of it is capital, so out of the CapEx goes up as a consequence of that. I think the second thing to say is we continue we're paying down our pension deficit, and that's part of this. We've got a 7-year deficit repayment program, and that sort of carries on, being a little bit of a cash drain there. And I suppose the third point is that we are continuing, and and I mentioned it in my presentation, continuing to reduce off-balance sheet finance gently. So that means there's a little bit more factoring reduction, a little bit more, all of these things continue at a reduced level. And the 20 to 30 that Phil mentions is indeed the number that we're expecting for the next couple of years.
Yeah.
But it should tick up a level, as you rightly point out, thereafter when these things do not go on forever. We're nearly there, but then it ticks up a bit towards the sort of the 40s.
And you see that with the CapEx spend, because we're at a bit of a peak spend now with this Forte and the Oracle to SAP upgrade. So that's a piece of it. And then, as you say, we still aren't quite at a point where we've got the balance sheet completely normalised. And then growth does absorb working capital as well within that. What's our metric for every 10 million on?
Yeah, we said it's about 5% of revenue. It's 30 days, 30 to 40 days translates through to working capital.
Any more? Great. Well, thank you for your patience. That's very impressive concentration. Thank you for coming. We won't be doing this every year, so you'll be pleased to know. So thank you for your support. And I think there's some lunch at the back of the room, and the management team will be here to answer any other questions. Thank you.